You're so great on the whole team. Let's see. Good morning.
Say what? Oh, I'm just I don't know about Jeff. He's in the restroom, I think.
Yeah.
Oh, yeah. Cool. Yeah.
He's on offer, babe.
Oh, don't be nervous.
Oh, I'm not. He's leading. He's got it.
I think I'm gonna be sick. I think I take over.
Oh, you're funny.
advise that everyone is here, but it's not yet 10 o'clock. These proceedings are being live streamed, so we do have to wait until 10 o'clock before we can get started. Thank you.
That's why I gave the announcement that you did, because it's really hard. That's fine.
But,
We're crappy. That's what we're doing.
okay, I believe we're ready to get started. Christina, would you please call the first case?
Good morning. The first business tax appeal hearing we're going to hear this morning is Lance John Gasich, case number 190-34563.
Good morning, everyone, and welcome to the Office of Tax Appeals. Today's proceeding will be recorded, and a certified shorthand reporter will be transcribing everything that is said today. So do try and please speak slowly and clearly so that the record can be clear for the reporter. Also, both parties, is everyone here and ready to proceed?
Yes.
Okay, great. So we're going to go on the record now. We're opening the record in the appeal of Lance John Gasich before the Office of Tax Appeals. The case number is 190-34563, and today's date is Wednesday, January 29th, 2020. The time is approximately 10:01 a.m. So today's hearing is being So today's hearing is being convened in Sacramento, California. We're going to be heard by it's going to be heard by a panel of 3 administrative law judges, Jeff and Gija to my left and Shireen Radnor to my right. They're the other members of this tax appeals panel, and my name is Andrew Kui. All 3 judges are going to meet after this hearing and produce a written decision as equal participants. Although the lead judge, that's myself, will conduct the hearing, any other member of this panel may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. For the record, will the parties at the table please state their names and who they represent, starting with Respondent CDTFA?
Yes, Sunny Paley for CDTFA, and I am with Monica Silva and Jason Parker.
Okay, thank you. And for the taxpayer appellant?
Lance Gasich, representing myself.
Okay. So as one preliminary matter, the notice of panel that went out identified Sarah Hosey as a member of this panel, but Shreen Reidnar is going to be substituting in place of Sarah Hosey due to a scheduling conflict. Does either party have, CDTFA, do you have an objection to the substitution? And Mr. Gasich, do you have an objection? Okay, thank you. So I believe, Mr. Gasich, you indicated that you might have a witness, Robin Saunders, the former assistant manager at South Bay Organic Solutions. Is she here today?
She's not.
Okay.
I just have her letter, her testimony.
Okay, and that is part of the exhibit package, is that correct? Okay.
I was hoping I could get her out here, but she's would have to come all the way from Florida.
Okay, I understand. So it's just going to be you today, is that correct?
Yes, sir.
Okay, and CDTFA, do you have any objections to hearing testimony from Mr. Gasich today?
No.
Okay, great. So on the exhibits, I believe for Mr. Gasich, we have your exhibit index and package, which contains 12 exhibits consisting of 41 pages. And in addition, yesterday OTA received Exhibit 13, which was case information for a misdemeanor complaint in a proceeding against Charles Todd Hill. Do you have any additional exhibits, or does that summarize all of your exhibits for today?
That's it. Thank you.
Okay, sure. And for CDTFA, I have exhibits A through F. That's 136 pages. Are those all of your exhibits for today?
Yes.
Okay, great. So I'll get to objections. Does CDTFA, do you have any objections to any of the 13 exhibits that have been submitted by the taxpayer?
We object to the admission of Appellants 13 as being untimely. Exhibits were due approximately 2 weeks ago. There hasn't been a showing as to why that was not available at that time. Also, we would object on the basis of relevance as well as what it purports to be. We have no information as to what that charge is or who that person is specifically, if it's relevant or not.
Okay, and I'll turn to Mr. Gasich. Would you like to respond? There's been an objection raised to your Exhibit 13, the one that was submitted yesterday, I believe.
Well, in that case, I do appreciate the fact that it was late. It was just brought to my attention that the criminal case against Todd Hill, who was the owner of SBOS Solutions, I find that relevant to the character of the person that I was involved with. And it's, he was defrauding money from many people at the time. And I thought that was relevant to how he treated me and the situation I was involved with.
Okay, so with Exhibit 13, it appears to me it's just it lists an unspecified misdemeanor case. It doesn't indicate what it's for, and it looks like there hasn't been a pleading or conviction in that case. And also in that case, or in this case of this exhibit, it is submitted untimely. I did mention at the conference there would be a due date 15 days before the hearing. And it does look like in this case you do have exhibits that were timely submitted referring to the arrest of Mr. Todd Hill. So it does also look like Exhibit 13 is duplicative of what you're trying to get to that's already in your other exhibits. So I'm just going to exclude Exhibit 13 as untimely because it doesn't, as untimely, it also doesn't appear too relevant or to what we have today.
Can I say one more thing?
Yes, go ahead.
My hope was, because I was going to communicate with the DA who was in charge of that case, that perhaps that's where my case belongs in that case, because it's just that it's a series of people kind of similar to a class action lawsuit where it's a bunch of investors that have been defrauded, and so my feeling was that that's where my case belongs, not on my lap. Okay,
I understand, and you're certainly welcome to provide your testimony today regarding this matter, and you'll have an opportunity to say that later. So with the exhibits, did you have any objections to the exhibits that CDTFA had submitted today?
No.
Okay, with that said, the exhibits 1 through 13 for the taxpayer and 1 through 12 for the taxpayer, excluding Exhibit 13, and A through F, I believe. That's correct. A through F for CDTFA are admitted into the evidentiary record. So just as a summary, a recap, The way this will proceed today is we'll start with the taxpayers' presentation and testimony, and they've been afforded 15 minutes. Mr. Gasich has 15 minutes for their testimony, followed by turning it over to CDTFA, who will have 15 minutes to do an opening presentation. After that, either party may ask questions, and in addition, since Mr. Gasich will be testifying under oath, the CDTFA will have an opportunity to ask questions of Mr. Gasich if they so choose. Following that, each party will have 5 minutes for closing arguments, and that will conclude today's hearing. Does either party have any questions about that before we proceed?
Thank you.
Okay.
If I go over like a minute or two, is that a problem?
I don't have a stopwatch, so you're good. Okay, so the issue on this appeal is whether an appellant is personally responsible for the unpaid liabilities of South Bay Organic Solutions, Inc. And before we turn it over to Mr. Gasich for his testimony, I'm going to ask you to raise your hand and swear you in. Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
I do.
Okay, thank you. You may proceed with your presentation.
First, I just want to thank the panel for the opportunity to present this final appeal. And I was going to I was going to read orally or verbally my testimony, my opening testimony letter, my testimonial. And then prior to doing that, I just wanted to mention that that the woman that had been assigned to my case originally, Carrie Schottel, back in 2000, I believe 14, I worked with her for about a year presenting evidence that I had amassed, and it was more accessible to me at the time because it was closer to the time that I left the company, so there's more available to me. After dealing with her for a year, she had agreed to dismiss the case, and then it was overturned a month later by her supervisor. During that time, I got rid of a lot of my evidence because I thought I was done with this. So then when I found, when I had to go back, when the news came out that I had to, that I had to stay with the case, I had to amass more material that had been lost, and unfortunately I don't have everything that I originally had. So I just wanted to state that for the record. And before I read my testimony, I just wanted to say that up until I got the bill from the BOE, which is now the OTA, I was completely unaware of any tax liability at all. I had left the company after 6 months, and this was in September, and I was not aware of any tax liability at that time. And the bill that I got was even including the revenue that was generated after I left the company. So the bill that I'm actually have the liability with is actually inflated, even if I was actually going to take responsibility for it, which I don't feel that I should. I was completely unaware of any tax liability. I did not have any retail experience. I was not in charge of the finances. Todd Hill was in charge of the finances 100%. So it came as a shock when I got the bill, and I've been dealing with this for years now. So I'll just read my testimonial and then just go through some of my exhibits quickly.
Can I just interrupt quickly? I'm sorry, Mr. Gasich. Can you please speak into the mic a little closer? We can't seem to hear you on the live stream.
That better? Closer? Okay. Thank you. I was contacted and hired by the owner of SBOS, Todd Hill, to open and run a retail business, DBA South Bay Organic Solutions. He had already secured the lease, formed the corporation, and set up the banking before I was contacted. Todd Hill did not want to be on record as an officer of the company because of other business dealings that he had going on in real estate and the stigma of the cannabis industry at the time, would be unfavorable for him raising investment capital. I unwittingly signed on with Todd and his company April 1st, 2011. I was seeking work because I had lost my mortgage company of 10 years due to the Great Recession. He needed a straw man, and like all con men, he took advantage when I was vulnerable. He offered me a $5,000 a month salary to put my name on the corporate charter as the CEO and help get the business jump-started. As evidenced by numerous correspondence, emails with Todd, and a statement of fact by the then office manager, Robin Saunders, I nor any other employee had control of the finances. If anything needed to be paid, it was personally authorized by either Todd or his personal secretary, Sue. He had complete control and authority of the finances. Complete authority. My responsibility was to build a team of employees and procedures that he would later inherit and manage. After 5 months of working at SBOS, I left the company in late August 2011. Todd Hill then changed the locks in the front door to the business, and more or less we ceased correspondence. And he still owed me $10,000 in back pay. After I had left, I asked him to take my name off the corporate charters as the CEO. He said he would make sure that he did at the end of the year. I told him, please make sure everything is in order with taxes and etc. I didn't want anything blown back on me. He assured me he would take care of everything, which he obviously did not. I was compliant because he still owed me money, owed myself and my contractor friend money that my contractor friend had contributed time and material to the building out of the office space. Todd Hill continued to operate and run the business until it was dissolved sometime in 2012. From what I've come to understand, he milked the company dry to recoup his initial investment. He accomplished this by burning people like me and not paying the taxes. I was never aware that the BOE sales tax liability was not paid. I wasn't even aware that there was a tax liability until much later in 2012 when I received a letter from the BOE. Again, as I stated before, I've never involved in retail business, and that was not my responsibility because I was not part. I had nothing to do with the purse strings. Only in emergencies was I able to, maybe write a check for a phone bill or something. So that concludes my testimonial. I would just like to go briefly through my exhibits, just to point out some of the experiences that I had at the company. I could go in order. Do I need to call out the exhibit itself, or?
If you could refer to the exhibits, that would be helpful so we can follow along.
Sure. Exhibit 1, page 1. Todd Hill is taking charge of the business as evidenced in the email. I will get the place furnished with furniture, product, and insurance for the opening. I'm just trying to show that he was always in direction of finances. Exhibit 1, page 3, Todd Hill setting up business operations. From Todd Hill, the email states, it is important to us to get all of these docs signed by the employees. Please do not change any of the verbiage. Our attorney did these docs. Thank you. So again, he's showing control of legal proceeding or legal documents within the company. And then Exhibit 1, page 5. Please keep, this is Todd Hill to Robin, the manager. Please keep, I highlighted some of these things within the paragraph, so I'm sorry if you can't follow me on this. Please keep track of the time you spend before you start so that you can be compensated for your time. Again, he's showing that he's the one in control of paying things. Down below on the same page, Todd Hill is giving instructions on business operations, figure out the point of sale system, inventory system, blah, blah, blah. Exhibit 2, page 1. This is the letter that Robin Saunders provided as evidence to her experience while working with me, with Todd and the crew at SBOS. My name is Robin Saunders. I worked at SBOS as an assistant manager during the time frame in 2011 that Mr. Gasich was the general manager. I reported directly to Mr. Gasich and to Todd Hill, who everyone knew was the owner and ultimately controlled all financial decisions regarding who, what, and when got paid. I know for a fact that Todd Hill knew about the sales tax liabilities. He was the final decision maker on all bills. I recall numerous times that Lance and myself would ask Todd for money to pay bills, and it was always met with stonewalling, saying he would get to it later. This is how he controlled the business, which was a huge level of frustration for both myself and Mr. Gasich. Please make the correct and ethical decision to relieve Mr. Gasich of his liability. He is in no way responsible for the irresponsible and self-serving actions of Todd Hill. That was Robin Saunders. I worked with her, day in, day out, from 9 to 5. So she had intimate knowledge of how things were run. Exhibit 3, page 1. Todd Hill is corresponding with the bank manager at First Republic Bank, Kelly Yang. He's instructing Kelly to please pay these checks that had been held up for insufficient funds. She wasn't sure what to do. So this is his correspondence to her, showing that he's the one that's calling the shots with the banking. Exhibit 4, page 1. This is Todd Hill instructing his secretary, Sue, what needs to be paid. Sue, you are the one that got the cashier's check and paid it. What amount did you send? I gave you the money for this. The $2K of money is owed to me that I have not collected. Showing again that he's instructing people on what needs to be paid. Exhibit 5, page 1. This is myself corresponding with Sue Goodwin, pleading with her to to pay the bills. Morning, Sue. Please call AT&T first thing this morning and get the hold released on our long distance. We cannot call or fax outside the area code from the office phone. Please, with sugar on top. Also, as a reminder, I need the replacement checks for the Mark Borghese and the check for Cannery Kitchen. Please leave the 2 additional blank checks for vendors, which I will need in a couple days. Again, this is showing that every time I had to get something paid, it was just, excruciatingly painful to get things done. Down below, again, asking her to prepare the replacement check. Exhibit 5. I think this is page 1. It's cut off in the bottom. It's an email correspondence from Todd to Sue. Again, Todd is instructing Sue to pay rent. Can you please cut a check for $7,320 to Union Plaza for August and September rent? This needs to go out this week. Again, Todd Hill instructing what needs to be paid. Exhibit 6, page 1. This is myself to Sue, again requesting checks to be cut for vendors. Sue, please confirm receipt of vendor check request dated 7/5. I will need to pick them up by 1 p.m. Thank you. Everything in Exhibit 6 is kind of this, just a bunch of stuff that showing that a bunch of transactions and time that that Sue spent doing all of the back-end work for the business, which I had no part of. She would bring me in on meetings to participate and give my opinion. But ultimately, she was the one running things from the back end of the business. Exhibit 8, page 1. This is some checks that had been returned NSF, and it's Todd Hill instructing these checks to be paid. Exhibit 9 is the statement from the EDD of my unemployment insurance award that I claimed once I left. So what I wanted to make sure that was known, again, as I stated earlier, I left the company. By September, I was gone. And the company continued to do business for, I think, at least 5 or 6 months. And the bill that I received includes the revenue that was, generated during the time that I wasn't even there. Exhibit 10, I guess this is kind of the character thing. This is Todd Hill up to his usual shenanigans. He was arrested in Los Gatos on 4 grand theft arrest warrants. This is part of the lawsuit that's still going on, which was Exhibit 13. But I guess more investors have come forward, so now it's like 14 rather than like 2. So this guy was, he took 2 people, one for $200,000 and the other one for $500,000. So, I was unfortunately and unwittingly involved with somebody who, had unscrupulous behavior. And, I am the victim here. I pay my bills. I'm a working man. I don't pretend to be a mover and shaker. I'm a guy that just gets up and goes to work. And that's all I have to say.
Okay, thank you. At this point, I would like to ask City TFA if they have any questions for the witness.
No, thank you.
Okay, and just a quick point of clarification, we are the Office of Tax Appeals. We're a separate agency from the State Board of Equalization, which had handled this prior to 2018. And I did have a couple of questions for you, Mr.
Yes.
Gasich. So in looking at CDTFA's documents, they had attached the signature card and copies of canceled checks for First Republic Bank, and
Yes.
on the signature card, it looks like it only lists one authorized signer, which was Lance Gasich, president, and I'm just trying to reconcile this and then the cash checks with your signature on them to the testimony from the to the emails and the testimony that you gave earlier,
Yes.
indicating that Todd Hill was the person directing payments, and I'm just trying to understand how Todd Hill was making the payments if you're the only person on the bank account, and I'm wondering if there's a different account or if there's some explanation just to reconcile the
I can
emails.
explain that.
Okay.
Again, he didn't want his name on anything, and he did have multiple accounts, so he was paying things out of other accounts that would be applied to the business. I was the signer, but everything had to be approved. They would set out the checks, and then all I would do is just sign it. I didn't have control over what was, why those checks were being cut, but I would sign the checks to get to actually, move forward with the, with the transaction that needed to, whatever needed to be paid. But often other checks he'd be paying stuff from other accounts. I didn't even know where they were coming from.
Okay, so the money that this business earned, did that all go into the bank that you were a signature on, or did money go to different bank accounts?
I don't think I follow you.
Oh, so the money that was collected from the sales that the business made, did that all
yes.
go into the bank account that you were the signer on, or was this money going into separate accounts? Or
I believe most of it went in there, but he would move money from there and into other accounts, from First Republic.
Okay. So, and Mr. Todd Hill, was he, what was his relationship to the corporation? I understand, was he an officer, or was he a shareholder?
He's the one that started the company.
Okay.
He had he had found the property, he had formed he was the one that was on the lease.
Okay, was he a shareholder in the corporation? Or?
Owned the company. I was not an owner.
Okay, so your role was an officer and his role was a shareholder.
Right. He was the owner. I was the he needed, because he wanted to incorporate, he needed somebody to be a director.
Okay.
So I offered to put my name on there, although I did not act as a CEO.
Did you have any ownership interest at all in the corporation?
No.
Okay. So as far as the EDD statement that you had brought, I'm just trying to understand this because you were saying that you left the corporation, I think, in September of 2011.
Yes.
And I'm wondering, I'm just trying to understand what the EDD statement is. Did you claim wages from September, or did you claim wages from January of 2012? When did the claim start?
Well, I think I wasn't planning on filing unemployment. So I didn't file it right away, and then I decided to go ahead and file it. So I filed a little, after I had left the company, like a couple months. But I think what they do is they take your best quarter's earnings, and then that's what your installment, what your allowance is going to be. So.
Okay, and if I'm looking at this, it's your exhibit with the Notice of Unemployment Insurance Award that we just went over, and it looks like it's saying, if I'm understanding this correctly, that you didn't receive wages for the fourth quarter of 2010, the first quarter of 2011, the second quarter of 2011, but you did receive wages for the third quarter of 2011 is of $15,000. Am I understanding?
I think he paid me because I think I went a couple of months without getting paid, and then he paid me in a lump sum.
Okay.
Yeah.
So as far as the liability that's concerned, at issue, my understanding was that arose from a non-remittance return, and if I'm looking at CDTFA's exhibit was the decision. It was saying that you filed and signed the return for the liability at issue. Are you disputing that?
No, because I didn't even. I think he sent that over electronically, and I had already left the company. I didn't. I was assuming whatever I was signing was making sure that he could move forward with paying things appropriately and handling what business needed to get be done.
Oh, so are you disputing that you actually signed that return, or?
No, I do believe signing a return.
Okay.
Yeah.
I'd like to briefly turn to CDTFA. So when was the return filed at issue?
1 moment, please.
Okay. I'm just trying to understand the termination date, and when these additional
I know I
lots?
had already left the company.
Okay,
Yeah.
Their term was filed January 31st, 2012.
okay.
So I had been out of the company for, 4 months, 3-4 months.
Okay. And for CDTFA, I think I remember there was some reference to EDD wage info. Do you have in the exhibit package information on what wages were paid to Mr. Gasich and for what periods?
Give me one moment.
Okay.
It doesn't break down by employee. It just, the number of employees reported and the wages reported. It doesn't denote by person.
Okay, so you don't have any information
Don't
on
have
the file
specifics,
on
no.
when he was paid? Okay, thank you. I should ask my co-panelists if they have any questions to ask at this point. Okay, I think that is all I had at the moment. And just to clarify, so are you, the banking documents that CDTFA had submitted that list you as the only signer on that account, do you dispute that you were the only signer on this account, or do you contend that Mr. Hill was also a signer on the account?
Judge Quee, I don't even know, to be honest. I mean, he would come out of the blue with paying stuff at the last minute, and I don't know. He was good buddies with the president of the bank, and they always had wheeling and dealings that I was unaware of.
Okay.
I mean, I could have had 5 other accounts there. I mean, I really don't know.
Okay, thank you. So I'll, at this point, turn it over to CDTFA for their opening presentation.
In 2011, appellant ran South Bay Organic Solutions Incorporated, a medical cannabis dispensary. As seen in Exhibit B, on December 26, 2014, a notice of determination was issued to the appellant for the unpaid liabilities of South Bay. As you're aware, personal liability may only be imposed if CDTFA establishes that while the person was a responsible person, the corporation collected sales tax reimbursement from customers and failed to remit such tax when due. Specifically, by a preponderance of the evidence, the 4 elements that must be met for personal liability to attach under Section 6829 of the Revenue and Taxation Code are: 1, the corporation must be terminated; 2, the corporation must have collected sales tax reimbursement; 3, the person must have been responsible for the payment of sales and use tax; and 4, the person's failure to pay must have been willful. The first 2 elements are not in dispute. In this case, appellant filed South Bay's sales and use tax return on January 31st, 2012, reporting tax due of approximately $32,000, Exhibit C, Dual G. The reported taxes went unpaid. When compliance staff contacted appellant by phone on July 17, 2012, as shown in Exhibit C, Dual A1 and H, the department learned from the appellant that the company had closed 6 months earlier. As to the third element, responsible person, means that any person having control or supervision of, or who was charged with the responsibility for, the filing of returns or the payment of tax, or who had a duty to act for the corporation in complying with any provisions of the sales and use tax law when the taxes became due. In this case, there is ample evidence that appellant was a person responsible for handling South Bay's sales and use tax matters throughout the liability period. As shown in South Bay's seller's permit application and Secretary of State filings, appellant was the president, CEO, secretary, CFO, and agent, with no other corporate officers, and that's shown in Exhibit C, Dual E, B, and C. Further, appellant submitted South Bay's only sales and use tax return for 2011, again, Exhibit C, Dual G, the 401 electronic filing. Appellant asserts that he was only a manager of the business and that Mr. Todd Hill was the owner of the company. While there is some support to show that Mr. Hill was a financial backer, the company was appellant's. He was the sole officer, he registered it with the department, he ran the business, collected the tax, and kept it and used it to pay other debts. The involvement of Mr. Hill does not negate that appellant was a responsible person for South Bay's sales and use tax compliance. As to the fourth element, willfulness, Appellant argues that the department hasn't established that his failure to pay was willful and that it's unfair to hold him personally liable. Failure to pay is willful if the person had knowledge that the taxes were not being paid and had the authority and ability to pay the taxes but failed to do so. A person can be willful even though there was no bad purpose or motive. By virtue of his role as the sole officer of South Bay and as the only signer on South Bay's checking account, as shown in the business bank documents Exhibit E, appellant had the authority to pay the taxes or cause them to be paid. As to knowledge, the evidence shows that appellant knew that South Bay's taxes were not being paid. As Exhibit C, Dual G, the electronic filing revenue record 401 shows, as president of South Bay, he submitted its sales and use tax return on January 31st, 2012, yet did not make any payment. Finally, as to the ability to pay taxes, South Bay had funds available to pay the taxes. During the relatively short liability period, the company reported approximately $373,000 in sales and collected sales tax reimbursement from its customers that was available to pay the sales tax liability, yet the corporation failed to remit the taxes to the state. Instead, those funds were used to pay other creditors, rents of approximately $15,000, utilities, and payroll of employees, including himself, of $86,000 per the EDD records, and that's Exhibit C, Dual I, J, and F. Whether due to appellant's own decisions to pay other creditors instead of the state or his deferral to Mr. Hill, the evidence establishes that appellant willfully failed to pay or caused to be paid the taxes collected and owed to the state. Based on the evidence of the record, the department has clearly met its burden of proving the elements for imposing personal liability to appellant, and therefore the appeal should be denied. Thank you.
Thank you. And I did have one question or clarification for CDTFA. And I was looking at your Exhibit A, the decision and recommendation, and on page 11, when it's talking about why he wasn't willful, it says Mr. Hill was not an owner or an officer of South Bay. That's on page 11 of the decision and recommendation. And I'm wondering if CDTFA has any documentation here that shows what the ownership, reflects what the ownership of the corporation was and who the owners were of the corporation.
What we do have is the Secretary of State and Corporation records, as well as the seller's permits as referenced. Again, we don't dispute that Mr. Hill apparently was a financial backer, but we don't have any evidence as to ownership interest.
Okay, so then...
Other than that establishes that Mr. Gasich was responsible. And it is quite unfortunate if he, I think he used the terms, unfortunately and unwittingly involved, but he availed himself of that. He put himself as the owner of that company. He was all of the things. There was no one else listed.
Okay, yeah, so I just, CDTFA doesn't have information on what the shareholder percentage ownership was for this corporation then? Okay, thank you. Do either of the panel members have any further questions today?
I don't know if this is, but what's CDTFA's response to appellant's allegations that Mr. Hill was in charge? I call it the kingpin defense, right? His signature appears on checks, but he's got some evidence and testimony that he needed the permission of Mr. Hill before he could do anything, and I didn't hear the rebuttal to that.
Well, given the fact that he is the only signer listed on the bank account, if he surrendered that to Mr. Hill, that is on him. But ultimately, as the CEO and CFO and all of the things, he has ultimate responsibility for that. And again, it is unfortunate if he then surrendered that to that, but he took that responsibility and that duty and that responsibility when he took those titles and took that position. Those things have meaning, and that is why they matter in a company.
So then I have a follow-up question for Mr. Gasich. How is it, I mean, they're essentially saying when you've got an officer that can delegate to somebody under them, right? And in this case, they delegate, their position is that it was delegated uphill. What is Mr. Hill's authority over you if he's got no paper, his signature doesn't appear on anything, he's not an officer? In other words, how is it that he exerted the authority? What would be the consequence if you disobeyed him?
Well, I would have got fired. So, I mean, I was protecting my job. I mean, I needed the money.
Have any documentary evidence that he had that type of power? I understand that's the argument, but there's no fingerprints of that.
Well, he was the one that founded the company. I had no idea that this company even existed until he called me and brought me in to use me in a certain sense for his own gain. So I didn't have any control over, everything had to go through him.
And obviously, if he owned 100% of the company, he's got that power.
Yeah.
Do we have evidence of ownership, stock certificates, anything?
Everybody knew if I had all the employees here, they would all under oath tell you that he was the owner. I mean, he called all the shots. I understand that I had a responsibility as the CEO. I thought he would do the right thing and not, I didn't know I'd get into this kind of nonsense. I mean, dealing with him and all the things that I went through working with him was hard enough. I mean, that's why I left the company, because I could see it was not the type of guy I wanted to be involved with. Yeah.
So, with appellant's testimony that he left the corporation in September of 2011, obviously CDTFA billed for through the end of 2011. I'm just wondering if there's any evidence in the record indicating that he continued working after the date that he claims, and what CDTFA's position on that is, if they could identify anything that led them to believe that was the case.
We have the filing of the return, so we know that at least that he's involved at that time. Other than that, we don't have an affirmative surrender of his position. There could have been a filing indicating I no longer am involved with this corporation. We do not have that whatsoever. So we have evidence of involvement, but we don't have evidence of departure.
Okay, so as far as phone contacts, ACMS contacts for the billings, was there any communication with him during that time period or after that time period?
On a yearly filing basis, based upon the fact that they had estimated $1,000 of income a month, so they put them on a yearly filing. So the filing was due in January.
Okay. Are there any further questions? Okay, I believe we're ready to move on to closing arguments. I'll turn it over to Mr. Gasich. You have 5 minutes to make any final points that you would like to make today.
Regarding the $80,000 for the EDD, is that what they're saying that is that the income that's not just my income?
Correct.
Okay. Yeah, because I made nowhere near that. But, I think I've stated everything I need to say. Thank you.
Okay, thank you. And CDTFA, would you like to make a closing argument before we conclude today?
Thank you.
Okay, then we're ready to end. The panel is ready to close the... Okay, so this case is submitted on January 28th, 2020. The record is now closed. Thank you, everyone, for coming in today. So the judges are going to meet and decide your appeal after today, and we'll send you a written decision within 100 days of today. Today's hearing in the appeal of Lance John Gasich is now adjourned, and we'll have a brief 5-minute recess before we call the next appeal matter. Thank you. Yeah, there's only one more. I think there's, I thought there was two total. Is there one in the case after you, or is it just?
Yeah, there's, yeah, we have Suzanne's case.
Oh, I'm sorry. Okay.
Isn't Mehrra next? Are you on Mehrra?
Oh, I thought that was in the next one. Maybe I'm-
No, I don't think so.
Okay.
Arnold, do you have a copy of the,
I thought this mirror was that. Oh, okay. Thank you. So if the parties could come back to the tables for the appeal of Lance John Gasich. Thank you. We just have to wait a moment for the reporter to come back.
Matters, but
It's the wrong tag, yeah. Thanks. I know the last one. Are you ready to start? Okay. Just let me know when you're ready.
You can now change.
Change the date, yeah. That's fine. Okay, we're going to briefly reopen the record in the appeal of Lance John Gasich, OTA case number 1903-4563. The time is approximately 10:50, sorry. So one of the parties requested that we reopen the record to make a final comment. So I'll turn it over to Mr. Gasich.
Thank you. I hate to break into your time off there, but something came to mind, and that was regarding the tax liability with the corporation. I never benefited from any of the either the liability or the write-off of any of that. It was not anything that didn't come through me. So I think that determining ownership, that would have been something I would have surely taken advantage of. Would be the business expense write-off, which I never had any. I didn't know anything about it. Don't know what the numbers were.
Okay. Thank you. Would CDTFA like to respond to the final point raised? Okay. And do the other member?
No, I have no question.
Do you have any questions? Okay. So we're ready to close the record again in this hearing. The case is submitted on January 29th, 2020. Correction, I previously said the 28th. It's actually the 29th. And the hearing in the appeal of Lance John Gasich is now adjourned, and we'll have a brief recess before the next appeal matter. Thank you.
We're ready to start our next case in the business tax appeals. It is Mehrra Jewelers, Inc., case number 18073423.
Morning, ladies and gentlemen. Before we go on the record and begin, I understand the appellant brought some new documents today that he wishes to have admitted.
Yes, actually they weren't provided before. There were only minor additions towards the end. I had not done a conclusion before because I was expecting a conference with the San Jose District Office. So I updated that document, but everything else has been provided before.
And was somebody making copies of your documents for you?
Yes, yeah.
Do you have them yet? All right, so we'll sit and wait until the documents come, then we'll go on the record. How many? Oh, I think we have the copies coming in the door now. Let's see. What is your name, sir? Mr. Iyer, do you have a set of copies?
Yes.
And does the department have a set of copies? All right. Let's take a moment. Let me first ask somebody from the department to indicate whether or not they have the documents and have had a chance to look at them.
Your Honor, we're going to object to the admission of these documents that are coming in today. They were due 15 days ago.
So you have, to answer my question, you have looked at them?
I have not seen them, but
Okay.
I have looked, I have them, yes.
Yeah, I want the department to take 5 minutes or less. I and my fellow judges will take a few minutes to look at what we have. Then I'm going to go on the record. We're going to begin the proceeding and address the admissibility of those documents. Department ready?
Yes, we are.
Alonzo, let's start the record, please. Good morning, ladies and gentlemen. My name is Michael Geary. I am an administrative law judge with the Office of Tax Appeals, and we are here today to take evidence and hear argument in the appeal of Mehrra Jewelers, Inc., OTA case number 18073423. I am joined on the dais by my colleagues, Judges Anjija and Stanley, and while I, as lead, will be primarily in charge of today's proceeding, we three deliberate and decide all of the issues presented, and each of us will have an equal vote in those deliberations. Our stenographer, Ms. Alonzo, is using her equipment to take down everything that is said on the record and to help us make a clear record that can be easily understood when read after she prepares a transcript. Please speak clearly and slowly, and please speak into a microphone. You have to get pretty close to these microphones. I see that the department side only has two. Just do your best to speak into a microphone when you are speaking. Do not speak when someone else is speaking. It's difficult for Ms. Alonzo to accurately record when two people are speaking at once. And do not engage in casual conversation at the table loud enough that Ms. Alonzo might pick it up, because if she hears it, you can assume she will report it. Let's find out who is here to represent the appellant. Would you state your name, please, sir?
Jack Iyer, J-A-C-K, last name is I-Y-E-R.
And Mr. Iyer, when we identify you for the record in a prepared transcript, do you wish me to acknowledge any certifications or licenses that you might hold?
I have a CPA from Illinois.
All right, so we will not identify you as a CPA. And who is here to represent the California Department of Tax and Fee Administration?
My name is Lisa Renati. To my left is Jason Parker, and to his left is Dana Flanagan Macbeth.
And how should we identify you in the written record?
Representative?
And how should we identify the others at the table?
Jason Parker is Chief of the Headquarters Operations Bureau, and Dana Flanagan Macbeth is Tax Counsel.
Thank you. Some general comments and admonitions before we discuss the evidence. I want the parties to understand that OTA is an independent agency, completely separate from the taxing agencies that appear before us. The evidence that the judges in this matter will consider is that which will be admitted soon in this proceeding. If a document, for example, has been submitted by an appellant to the taxing agency or in the briefing process before OTA, that document will not necessarily be before us as evidence unless it is also admitted by me in this hearing. We have not had the benefit of a pre-hearing conference at which we would have discussed and identified the issues presented and the evidence that the parties intend to rely upon to support their respective positions. We attempted to have two such conferences, and Mr. Iyer did not timely call in to either of those conferences. I'm going to state my understanding regarding the matters that bring us here today, and I will ask the parties eventually to either acknowledge the accuracy of my statement or to point out wherein I err. This is an appeal from a decision issued by the Appeals Bureau of Respondent, California Department of Tax and Fee Administration, and I may refer to that department as simply the department or the respondent in my later comments, denying in part appellant's petition for redetermination of the notice of determination that was issued to it on September 8th, 2014. The notice of determination assessed the tax liability of $128,839.86 plus interest and a negligence penalty of $12,884.02 for the period May 2nd, 2010 through September 30th, 2013, which I will probably refer to simply as the liability period in my comments. There are two audit items that remain at issue, my understanding. The first is the disallowed claim non-taxable sales based on a markup analysis and measured by $720,983. And the second is disallowed claim deductions for sales tax reimbursement allegedly included in reported total sales in the amount of $156,025. Three audit items are no longer in dispute. Appellant does not dispute audit items 2, that was disallowed claimed exempt sales in interstate commerce, or audit item 3, that was disallowed claimed exempt repair labor. And the department has agreed to delete audit item 5, which was disallowed claim non-taxable merchandise returns. Mr. Iyer, have I fairly and accurately identified the issues as you understand them? Yes. And department?
Yes, except for the measure of tax for the first issue is now $680,796. Fourth re-audit was to make an adjustment for a calculation error was made, and that's Exhibit A of the department.
680?
796.
796. Great. Thank you. Otherwise, it's correct?
Yes.
All right. It's my understanding, Mr. Iyer, and you can you'll have plenty of opportunity to argue otherwise, but it's my understanding that your client contends that the audit does not take into account damaged jewelry that was sold to a vendor in exchange for bullion with a bullion dealer, and that this should impact the cost of goods sold and the ratios relied upon by the department. Is that essentially your argument? Yes. All right. Now let's talk about evidence. Again, we did not have the benefit of evidence, of a discussion of evidence at a pre-hearing conference, but in the briefing process, I believe the appellant submitted approximately 35 pages of invoice copies. Appellant also submitted a brief, what amounts to an argument and an explanation as to why Mr. Iyer believes that adjustments are appropriate. And I believe that is all we had prior to today, and that was all that we included in the digital hearing binder that was either provided to the parties or the parties were provided access to it online and could download it there. Today, Mr. Iyer brought in some additional documents which we've been reviewing or attempting to review before going on the record. The pages appear to be numbered. I'm assuming that there are 57 pages in this package. And before we were on the record, Mr. Iyer, you indicated that most of these are duplicates of what's already included in the evidence binder, but some are new. Is that correct?
The page number 2 has a conclusion which was not in the original briefing binder. And that is only because I had originally written this brief hoping to get a conference with the district office in San Jose. So I just updated that page, but the other pages have been previously provided to the district office. So I was under the impression that it would be with the Office of Tax Appeals as well as the department.
Chair, just speak louder and close to the microphone and slowly, please.
So the second page is the only one that I updated. The remaining pages have been in one form or the other provided to the department over the course of since 2015. We have provided these documents prior to, so I was under the impression that they would already be part of the record, unless I'm mistaken about that.
Well, you heard my comments a moment ago that the evidence that we will consider is the evidence that I admit today. And again, had you participated in the pre-hearing conferences, we would have discussed that.
I want to apologize for that because my wife had a fall, and that's why I couldn't call immediately.
There appears to be a number of invoices in this package you brought today. Can you
can you represent to me that these are the same invoices that are included in the evidence binder that was provided to the parties? The first 2 pages of your documents, I don't recall seeing before. Has this been provided to my department, OTA, in the course of this appeal?
If I can explain, the first 2 pages have been provided. The only addition was item C and D. That was not there before because I had not drawn the conclusion. But until B, everything was provided before.
Okay, so you're saying that other than C and D, which appears on page 2, that this document is the same as the document that you provided to the Office of Tax Appeals with your briefing? What about pages 3 and 4? Have those been provided to the Office of Tax Appeals in the course of this appeal?
3 and 4, I'm not sure, but they are basically a summary of all the invoices, the 35 odd invoices that are, copied with it. These pages 7 through 41. So they're basically listing all those invoices and the
All right.
amounts.
So,
I'm not sure if I provided these page 3 and page 4 before.
all right, but 3 and 4, you're representing to me all of the information contained in Exhibits 3 or 4 are summaries of the information also contained in the 35 pages of invoices that are attached. Page 6 appears to be some of the audit work papers, and can you represent to me that, or 5 and 6 appear to be audit work pages. I take it that these are from the audit at issue?
Yes, and the only addition I made there was the amount of jewelry that were converted to coins on line number 2.
Okay.
This was not in the original audit.
The next, I'm assuming the next roughly 35 pages, because that's how many pages of invoices I had in my original package. Those are the same invoices, I'm assuming, is that right? And then there are what appear to be more pages from the audit work papers. At least pages 42 and 43 appear to be from the audit work papers. Is that what those are?
Page 43 is from the audit work papers, and page 42 is basically an adjustment based on what I had provided before as to what the exact amount of sales tax that was actually collected. There was a formula error in the spreadsheet that the client used. This was their first time, this was a new business, and this was the first time they were conducting business in the U.S. And so they had an error in the spreadsheet, which I corrected, and this was provided earlier to the department back in 2015. And I basically reproduced those, and I have copied the amount collected is the only column that has changed, which is column B on page 42, and that's comparable to page 43. That's the only change that has been made.
Okay, so 43, page 43, which is identified as Schedule 12D, dated 7/25/13, are you saying that that is an accurate copy of the audit work paper, and that page 42 is something that you created to show your adjustments?
Right, what it should have been, actually.
All right. What is page 44, 45, 46? As a matter of fact, through, it looks like through the end of the package, through 57, what are those pages?
They're all individual quarters sales tax returns without the formulaic error that existed in the client's original papers.
So, just to make sure that I understand, are you saying that pages 44 through 57 reflect the same numbers that appear on the sales and use tax returns filed for Mehrra Jewelers, Inc., for those periods?
Except for the formula error for the amount of sales tax collected. So on each of these pages, on the quarterly total tax, I have indicated what was actually paid according to the department's work papers on page 43. And so, for example, on page 44, I have total tax calculated without the formula error as $20,259, and the taxpayer had paid $20,222.
Show me where on page 44 you're reading those numbers, or tell me where.
To the rightmost, on the line that says total state, county, and district tax.
Okay.
Total first quarter amount, I have $20,259, which is the amount that is reflected on page 42, line 3 from the bottom.
When did you create these documents, pages 44 through the end of this package, 57?
This was provided, I believe, in 2015.
You created them in 2015?
Right, and this was provided to the San Jose District Office.
And you created them to demonstrate to the district office what your client's position was? All right. Department, if you'd like to tell me how you feel about admission of these documents, please.
Your Honor,
Be sure
your order
Thank you.
specifically said that the documents were due 15 days prior to the hearing date. Now we're at the hearing date after having attempted 2 pre-hearing conferences unsuccessfully, and we're presented with 50-plus pages, 1 copy, that have multiple changes. Some documents are new. As you pointed out, pages 44 through 57 have new formulas. There are new amounts as to overclaimed deductions of sales tax being reduced from $13,457 down to $2,482. These are significant changes in these documents for us to digest in less than 5 minutes with 1 copy for 3 people. There's foundational issues. There's no source documentation to support these recalculations. So based on all of that, we would object to this stack of documents being admitted today.
Okay. My pre-hearing conference order did say that documents were to be submitted 15 days prior to the hearing. Why didn't you do that?
I had a couple of issues. My wife had a fall. She had an abrasion on the back of her head. My wife had a fall, and she hurt the back of her head, and there was a laceration. She had a staple. And so for the last couple of weeks, I've been taking care of home and office, also dropping the kids off. And so much as I wanted to, send an email of these documents prior to, I was just not able to get to it. So I was barely trying to keep home and office going. And so it was my issue that prevented me from doing it. But I don't think the taxpayer needs to suffer for that. I actually called and asked if we need to even reschedule this once I send these documents. And I'm still open to coming back in 2 weeks after they have had a chance to review it, because my objective is to get the right amount of determination of liability. And if that needs to be done at a later date and we have to come back, I have no problems coming back. But my failing should not affect the taxpayer in this instance. And that's my only request.
my fellow judges even having a hard time hearing you, so these microphones will bend towards you. Be sure to get it as close as possible. Thank you. Reviewing these documents, it looks to me like the first 2 pages are essentially a summary of your argument. You can read this document in the course of your argument if you wish to. It won't be admitted into evidence. The 2 pages, 3 and 4, which purport to be summaries of information contained on the 35 pages of invoices that were part of the binder. You can use these in your argument to indicate the amounts that you have gleaned from those invoices, but I won't be admitting those pages. Page 5, 6 appear to be portions of the audit work papers. I don't think you indicated you made any changes to those. I'll admit pages 5 and 6 because they're part of the department's audit work papers. The 35 pages of exhibits, of invoices, that are currently part of the hearing binder, though they may not be in the exact same order you have them here, those will be admitted, but not from your package. They will be admitted as part of the hearing binder as it currently exists. Page 42 is the document that you created to show adjustments to page 43, Departments 12D. Page 42 will not be admitted, but you can use the information contained in that document in your argument to explain to us what adjustments you think were appropriate or would be appropriate in this case. Page 43, which you indicated is an accurate copy of a page from the department's work papers, Schedule 12D, will be admitted. It may be part of the department's exhibits and should be, since I think the department admitted most of the audit work papers. But I'll admit your page 43. And the remainder of the pages, which we haven't seen, the department hasn't seen, at least it could be that the district office has seen them, but we have not seen them on the dais. They haven't been previously offered to OTA. I'm not going to admit them in this hearing. However, I'm not going to prevent you from using any of the information contained in those documents in your argument to demonstrate what adjustments you think your client is entitled to. Do you understand my rulings? Yes. Okay.
And if I may, since I was not heard clearly, the reason I could not submit it before was my wife had a fall, and she had a laceration on the back of her head, and we had to go to ER and get some staples done, and she's been having some issues. And so I've been dropping off the kids, looking at the office, and also taking care of the home. So that's why I could not send it before the 2 weeks. Since that is my issue personally, I would not want my taxpayer to be affected by it. I'm open to rescheduling those hearings until they have had a chance to look at it. Whether it's a week or 2 weeks, I'm prepared to come back. And since all of the documents are up here, and once they have had a chance to look at it, we can regroup, if that is okay with you.
I am not open to rescheduling this hearing. I don't see reasonable cause to reschedule the hearing. We'll proceed today. If the department has concerns about what documents I'm going to admit, I'll give them an opportunity to state their objections. Does the department have questions or concerns about the documents that I intend to admit?
I have a question on page 5. That's it's being admitted, but that document is not an original copy from the audit work papers. It has an addition. I don't know if you had that.
I did not know that. Then page 5 is not going to be admitted.
Okay, it's not admitted. Okay, thank you.
I did say that it was going to be admitted because of my understanding it was an accurate copy.
If you look between...
Is 6 also different? You're saying it is different? Okay.
The only addition is the jewelry to coin conversion.
Okay, so 6 will also not be admitted. If it's been changed, I'm not going to admit it, but you can use it in your argument.
Record, all of those information was with the department before. The coins, the total jewelry to coin conversions, all of them have been before. The only thing we have done is summarize those because I was hoping that we could get a conference with the district to get this done before.
But we are not the department. We're a different agency, and we have to make our decisions based upon evidence that we admit at our hearings. Were there any other questions or concerns about the evidence from the department?
No, Your Honor.
Give me a minute while I light my computer up again. Internet, and we need to make sure that those who listen to this hearing through our YouTube channel can also hear you.
I'll try better.
Try to project as much as you can. No, I'm going to. All right. Back on the record. I want to pull up my binder, make sure we get all those admitted. I should ask you, Mr. Iyer, you have no witnesses, live witnesses today, just you making your argument, correct? Yes. All right. And the documents that we included in the binder were the 35 pages of invoices, and those documents, those 35 pages of invoices, does the department have an objection to the admission of those?
No.
Those 35 pages of invoices will be admitted. In addition, actually, there may be no additions. Was there one page, 43? Was the one page, is 43 an accurate representation of what's in the audit work papers? It is?
43 is.
All right, based on your representation, and the judges can verify that page 43 is admitted. I've already admitted all of your invoices, and those are all the documents that you've submitted that we are admitting today. The department has submitted revised audit work papers that I had being 3 pages and have been marked for identification as Exhibit A, 74 pages of audit work papers marked for identification as Exhibit B, notices of determination, I think there are 2 marked, 4 pages marked as Exhibit C, and the decision and recommendation issued by the Appeals Division of the Department, which has been marked Exhibit D, and that is 15 pages. Are there any additional documents that the department wishes to offer?
No.
All right. Mr. Iyer, do you have any objection to the admission of the department's proposed exhibits? Did you say that out loud?
No.
Okay, thank you. All right, the department's exhibits are admitted. By the way, back to Mr. Iyer's exhibits, we have page 1 is the invoices. The other page that I admitted will mark for identification and as evidence as your Exhibit 2. All right? Typically, what we do when there are no witnesses is we allow the department 15 minutes, we allow the taxpayer 15 minutes to give their presentation, and then allow a rebuttal after the department gives its presentation. Will 15 minutes be adequate for you, Mr. Iyer, or would you like to request more time?
I believe that should be fine.
All right. And typically, as I indicated, we give the department its only opportunity to argue and typically allow 15 minutes. Will that be sufficient period of time for you?
Yes.
All right. And then if you choose, Mr. Iyer, when the department's done, you'll have about 5 minutes for rebuttal to address the department's closing comments if you want to, okay?
Okay.
All right, so the written documents have been admitted. Let me just check one thing before we proceed. No, we're ready. So, Mr. Ayer, if you're ready to give your argument, your first argument, you may proceed when you are ready, and be sure, while you're giving your presentation, to stay right up close and speak up loud into that microphone, please.
Okay. So the first issue I want to address is the excess claimed sales tax. So this was the new business for the taxpayer. It started in 2010, and they had an audit almost immediately. Being a new business, they tried to do the best they could, and they were filing the taxes on their own with no other help. And so there were some errors in the formulas that they set up. And so we had this assessment of 156,000 of measure for excess claimed sales tax reductions. So on page 43, the department has the total sales tax claim deduction as 288,140, against which the sales tax reported was 274,683, with an overclaimed deduction of sales tax of 13,457. I went back and recalculated the spreadsheet. After removing the errors, the total sales has not changed. The total gross sales reported for each of those quarters, I have not changed that. That has not been changed. It will match exactly what the department has. I changed the formula that they had incorrectly put into the spreadsheet, and I came up with each of the quarters' total sales tax. So, for example, for the first quarter of 2013, they had 20,259 of sales tax collected, and they had paid 20,222. So, summarizing all of that in page 42, the total sales tax claim deduction, if they had the right formula in the spreadsheets, would have been 277,165, against which they had reported and paid 274,683. That leaves an overclaimed deduction of sales tax for 2,482. It translates to a sales tax measure of 29,406, as I have reflected on page 2. The reason for that is that this was also, by the way, provided to the department in San Jose in 2015, and we were repeatedly requesting them to correct it. And so the actual sales tax collected was 277,165, not 288,140, which is based on an incorrect formula. And so I believe that because of the error in the formula, the taxpayer should not be deemed to have collected more than they actually did, since the purpose is to make sure that the liability is correctly determined. And that's why we came up with the difference of 2,482 and a measure of 29,406. So that's the one issue at hand that we were disputing. And each of those spreadsheets for each of those quarters has the correct formula, and on the against the total sales tax, total state, county, local, and district tax, under the quarters, to the right of it, I have indicated the amount of tax that was actually reported. And on page 42, I have also used the sales tax reported from the department's work papers to come up with the 274,683. That exactly matches what they have on page 43. The only thing that has changed is the actual sales tax claimed deduction, which reflects what actually was collected by the taxpayer as sales tax from customers. The amount is 277,165, not 288,140. moving on to the other issue.
Before you move on to the other issue, and I've stopped your time, so, because this is our time we're using for clarification. So I'm looking at pages 42 and 43, and I see that sales tax reported are the same numbers that are used on the department schedule, the ones that you use on your calculation, but your numbers for sales tax claimed deduction is different. What did you look at to determine what your clients claimed?
Oh, I looked at the spreadsheets that they used for preparing the sales tax return.
Did you look at the returns?
Yes, and the returns reflect exactly, I'm not changing the return numbers, and that's why I've indicated what they actually reported. So I did not change that. They should have, the way they should have presented the information on the return is different. They still owe money. They still owe the $2,482. That is not being disputed. We know that there was an error. The magnitude of the error is what we are questioning and disputing.
Well, am I correct that in your calculation, the tax, the overclaimed sales tax is $2,482, and in the department's calculation, it was
$13,457.
Yes. Okay. And are you saying that the department used the wrong formula to determine their amount that was over-reported?
Effectively, yes, because the client used the wrong formula, and the department took that to be the number to use. So the way it worked was, we had the total sales number. For example, let's look at page 44 for a second. So for January, both of us agree that the total sales were $218,232. Non-taxable coins were $112,910. And the return merchandise were $2,624. But the tax collected was $8,154. And because of a wrong formula, that number was higher. And that is why for the quarter, I have $20,259, whereas using the taxpayer's incorrect formula, the department has $20,259. The department has $20,668 on page 43 against first quarter of 2013. And I have $20,259.
All right, you can move on to your next issue.
For the next issue, which is they disallowed other bulk coins, we had, this is a jewelry store. It's a retail store. So they import jewelry, and these are already prepared. Sometimes in the course of either transit or after having been here for a while, they could get damaged sometimes. And the cost of having them repaired is higher than the cost of, actually getting them repaired and selling them would not be worth it economically. And so what they do is they'll collect all this, and once in a while they will take it to their bullion dealer and give it to him in exchange for coins. And if there is a difference, they will either pay a check or they will get a check from him. So in other words, if they give him jewelry whose gold was weighing about 120 grams, if they got 3 coins, which would be about roughly 93.6 grams, they will get a check from him for the difference. If it was 4 coins, in which case it would be 132 plus grams, they will pay him a difference. And so
those 35 pages of invoices represent those. And these were also sent back in 16 or 17 by email to the district. And since I could not see in the work papers where they were adjusted for, the pages 3 and 4 are tabulations of all the invoices that were provided earlier by year. So for 2010, I have 58,337. For 2011, I have a total of 231,804, and that's on page 4. And for 2012, I have 143,507. So using the department's method, I used 58,337.35. I marked it up by the 1.41%, which is the markup on the bullion coins, and I came up with a sale value of 59,159. The originally audited bullion sales, which is on page 3, was 1619,981. Adding this 59,159 to that, I came up with the adjusted audited bullion sales of 1679,140. But that still had a difference of 36,466. And so the error percentage now has become 36,466 divided by 1679,140 for a error percentage of 2.17. Multiplying that by the department's figure of 12,214,169, I have a total disallowed claimed exempt bullion sales of 265,255. So based on the paperwork that was provided, I used the department's method of calculation, adjusted for these purchases which were not included in there, and applying the same markup percentage to those bullion coins. I came up with a 2.17% error, which applied to the total sales claimed was 265,255. We are not disputing, as you had mentioned earlier, the interstate commerce, labor, or the disallowed merchandise. And so my total for all this was a measure of 470,499.
Can you walk us through, by reference to a particular invoice, walk us through a sample adjustment?
If you look at page 16, on the right-hand side is an invoice for 14,350, which is on 8/20/11.
Tell me that amount again.
$14,350.
I'm asking because we had a really hard time copying these.
Oh, I'm sorry, $14,350.
Department, is that comport with the number that you see in your exhibit?
It's on page...
I'm going to have to look at the exhibits because I can't read the copy in front of me. Just a second.
All right.
What year is this from?
8/20/2011.
I think that's page 10 of the exhibit binder.
It's much more legible in the binder. Do you have it? All right, go ahead.
So if you look at the invoice, it's a purchase invoice from the bullion dealer. So he has taken back a gold lot worth $14,350, and it was applied to the purchase of 30 maple coins in the amount of $56,880. So that $14,350 was included in jewelry purchases, but it was actually exchanged for bullion. So I took that into page 3 under second line item 2.
Line item 2 under 2011.
Yes.
Okay. You want me to have him run through another?
On the same page, on the left-hand side, there is an invoice for $95,046 from the same bullion dealer, and he took a lot of gold worth $95,046 in exchange for 4 bars. Four bars of gold.
So
It's a bullion coin.
let me ask you, are you saying that your client exchanged $95,046 worth of damaged jewelry for
Bullion coins.
bullion coins? It says bars on the left.
4 bars. So and forgive me if I'm not very familiar with the business, is the coins are different weights. The normal coin that we all recognize is the 31.2 ounce silver maple coin. Some people buy bars, and the bars I think are close to 40 ounces each.
Words on the invoice actually say exchange for gold bars and coin, and refers to an invoice number 44744, right?
Right.
And is there an invoice 44744 in your evidence?
I could not find it anywhere in the audit work papers either.
All right.
And so I'm not sure if this reflects a sales invoice from the bullion dealer. I'm pretty sure it does, because I see a lot of invoices with the 43 series. And so he basically exchanged this lot of gold for some bullion coins and bars. And so I took that into the 2011 exchange of jewelry for bullion coins.
Okay.
I did the same thing for 2010 invoices, and that's how I came up with the 58,337, since the department used only the 2010 purchases for this test. And based on that, I applied the same percentage of margin, which was 1.41% on bullion coins. And so applying 1.41 to 58,337 gives me a sale value of 59,159. I added that 159 to the audited sales that they had of 1619981 and came up with 1679140. That reduced my total dollar error to 36,466. And then dividing that by the 1679140 is how I got the error percentage of 2.17. I applied that to the total sales, exempt sales claimed according to the department, which was 12,214,000. And that's how I came up with the disallowed other bulk coins should be 255 instead of 720 or corrected to the 680. And so my total is 474.99 for the measure. So we do recognize that, the taxpayer owes money. It's the error percentage that we are disputing.
Okay. Thank you. I think some of my fellow judges may have some questions. Judge Anjija?
Just one, the first one on page 16, or on page 10 in this binder, that you had referred to, that the $14,350 that was turned in was to offset the other invoice of $45,704. I can't find that invoice, $45,704, in these 35 pages. Is there any transaction where you can show the other side of the transaction, right, where the jeweler offset it? I mean, I understand the argument. I just don't see the second half where, in fact, we would see 45,704, the mirror image of this.
Oh, the first one, the 44,744, you mean?
The words that are written here say applied to offset purchase.
Oh, the
on
45,704.
invoice 45,704. I'd like
Correct.
to see the purchase. I'd like to see invoice 45,704. Or any other transaction where, I mean, in other words, you're saying.
I don't have it on me. Yeah, sorry.
One at a time.
You're saying they exchanged damaged jewelry in exchange for bullion. And I'm just wanting to look for the other half of that transaction. In this case, it would be 45,704. I didn't see it in my quick review of these 35 pages. I couldn't find the one that's referred to this invoice, which was the other one Judge Geary went through, 44,154. That was taken in exchange for that $95,000 purchase on invoice 44,744. I can't find it. I know I'm throwing a lot of numbers around.
So I would answer it with a couple of observations. One is that I don't have those two invoices on me right now. However, the only thing they purchase from Austin and Company is bullion. They do not buy any jewelry from them because Austin is a dealer in bullions only. They only deal in bullions. Does that help?
That answers my question.
So, let me just make sure this is on. I'm having trouble. The invoices that you pointed out refer to other invoices where jewelry was purchased. Most of the invoices that you submitted do not do that. How can you tell, or how are we to tell whether or not these were actually exchanges for purchased jewelry that shouldn't be counted in the measure of tax?
So Austin and Company is a company that only deals in bullion. They only deal in bullion coins. They do not deal in jewelry. The client, my taxpayer, basically buys jewelry from overseas, and they import it here. And when they get damaged, instead of sending it back for repair, because it's more expensive to do that, they exchange it for bullion coin. In the process, they absorb the loss of the labor that they are paid for in making the jewelry, but 99% of their jewelry purchases is overseas. They import it from overseas. In the process, they also pay customs duties. But when you see the reference to invoice numbers here on any of these invoices, it is Austin and Company invoices, and so it was always referring to purchases of bullion coins only.
But where I'm getting lost a little bit is, how do we know what jewelry, if any, was exchanged for these coins? In many of these transactions, it doesn't say. It just says, 3.6 22 carat for $325. It just says things like that. It doesn't refer to any jewelry exchange.
So are you saying there is no reference from here to a particular jewelry invoice?
Most of the invoices, I don't see one.
Right. The reason is they don't exchange each time something breaks. They accumulate it, and that's why you see lots where 90,000, 58,000, so it's basically lots of jewelry that are damaged, and they do this exchange once in like 2 months or 3 months, or more often if there's more damage. But there is not, at least I don't have anything here that traces this particular exchange to a particular jewelry invoice, if that's what you're hinting at. Is that what you're asking?
Yes, I'm asking how you knew that these were exchanges of jewelry and what the value of the jewelry was that you need to exclude.
Okay.
We can't necessarily tell that from what you've submitted.
I can make two observations on that. One is when they do the exchange, it's usually at the value of gold on that day. So if I go today, it might be $15.50 an ounce. And based on the weight, that's what they will pay. If I go tomorrow, if it is $15.20, that is what they will pay. And so that is why you see weight in terms of how much gold is being given to them in the form of jewelry, because then they go ahead and melt it. And then I think they also take out some wastage for it. That's the part regarding the gold weight. Can you please repeat the second part of your question? I missed it.
You're trying to answer my question, but I just, from the documents that we have in evidence, I cannot tell what jewelry you are wanting to exclude in place of the purchase of the coins. So it's my understanding that you've excluded some cost of goods sold, or you want to exclude some cost of goods sold, and you want to exclude some of the jewelry from the value that's been marked up as jewelry sold. But we can't tell what that value is from a lot of these invoices. We can't tie it together.
The value of the jewelry is determined based on the gold price on that day of exchange. And the department moved away from the cost of goods sold approach, and they went into the markup approach on the bullion coins and backed into the jewelry sales. So I followed the same method. And when I did that, I just took the exchanges of bullion coins for 2010, which was a 58,337. And those exchanges happened on those respective dates based on the gold value on that date. Austin Company, by the way, is a bullion dealer. So when the taxpayer sells bullion coins, like if I were to go and buy a gold coin from him today, I will pay him today, but I will pick it up only tomorrow or day after, because once I get the confirmed order, that's when he goes and picks up the bullion coin from Austin & Company. Austin & Company will not take back bullion coins in return. They will only take jewelry and give you gold coins, but they will not take back the gold coins in return. If that answers your question, I don't know if it does.
I have other questions, excuse me. I'm looking at my notes about the methodology used by the department, and I expect we'll hear from the department soon, that it appears that it compared the sales of monetized and non-monetized bullion to determine the markup and the error percentage. And I'm not sure how your invoices and calculations would have an impact on the department's methodology. Can you explain that?
The department's methodology, when they calculated the gold bullion purchases, did not include these invoices that have been provided. And for 2010, that amounted to $58,337. So we are admitting, yes, there was still an error in the reporting of the bullion coin sales. But if you include these purchases with the appropriate markup, which is the 1.41% that they have used, then the total sales are not 1.616. It is not 1.619981. It is actually 1.679140. And so there was these purchases that were missed, and so the corresponding sale was missed. And so therefore the error percentage was also greater than what it should have been. If once we include these purchases and the corresponding sales, the total sales go up for the bullion sales, even though the amount claimed was still higher by the calculated error percentage of 2.17. Does it make sense, or should I?
Ms. Renati, are you going to give the department's closing?
Yes.
The argument?
Yes.
Will you be addressing these points made by the taxpayer?
Yes.
All right. I have no more questions. Thank you, Mr. Iyer.
I had one question. From my understanding, and I get the argument, let's look at this $14,350, which is paid in a sense or transferred in exchange for the bullion, right? That's the weight, the dollar value of the weight of the gold. Conceivably, when they purchased it, I'm putting words in your mouth, my understanding is when they purchased it, they didn't just buy the jewelry, that's damaged jewelry, but when they bought it, it was at a wholesale or a resale value. It wasn't just for the weight of the gold, right? It's got craftsmanship, it's got art. So this, as a practice, costs them.
Yes, it does. But the problem is, cost of sending it back for repairs is much higher because you got shipping back and forth and the craftsmanship again.
I just wanted to point that out, so, okay. Good.
Thank you, Mr. Iyer. Department, you may proceed with your argument.
The appellant has operated a jewelry store in Sunnyvale, California since May 2010, selling bulk transactions of bullion and coins, retail sales of jewelry, and offers jewelry repair services. The jewelry is primarily purchased from a manufacturing business the appellant owns in India. For the period of May 2010 through September 2013, the appellant claimed a deduction from taxable measure for the bulk sale of bullion and coins of over $12.2 million. Reported taxable transactions for the same period was almost $3.2 million. And that can be found on Exhibit B, pages 6 and 7. The department's calculation of audited exempt bulk sales of monetized bullion, non-monetized gold and silver bullion, and numismatic coins was computed using a markup of cost audit methodology. The department transcribed all available purchase information regarding the purchase of coins and bullion from both customers and vendors for the period of May 2010 through December 2010, and that's on Exhibit B, page 41 through 49. A summary of the total purchases can be found on Exhibit A, page 10. Next, the department performed a shelf test for bullion and coins for the period of May 2010 through December 2010. Sales invoices and corresponding purchase invoices were compared to compute an audited markup of cost of 1.4%. The audited markup of cost was applied to audited purchases of bullion and coins to arrive at audited exempt sales of $1,619,891. A comparison of audited sales and claimed sales revealed a difference of $95,625, which represents disallowed claimed exempt sales for the period of May 2010 through December 2010. A percentage of error was then developed to project the error over the remaining periods. The appellant claims adjustments are warranted to account for additional purchases of coins and bullion. Recently, the appellant provided additional documentation, which is Exhibit 1, and the department reviewed the information and notes the invoices cover periods in years 2010, 11, and 12. The department's test of exempt sales covered periods of operation in 2010, and the department is unsure if the appellant is asking us to do an actual basis exam or if they just erred in giving us the other information. The department reviewed the 17 invoices within the 2010 test period, and the description of items appeared to be of jewelry and scrap rather than coins and bullion. The department also notes that every invoice includes a notation that payment for the goods was made by either cash or check, but no evidence of trade for coin or bullion. During the audit examination, the purchase invoices provided for coins and bullion included descriptions such as 1-ounce maple leaf coin or 10-ounce silver bar or 1-ounce Swiss gold bar. Additionally, the price per 1 ounce of gold coin was above $1,000, as you can see on Exhibit B, page 41 through 52. The purchases per the additional invoices provided by the appellant include a price per unit notations of $32 to $38, which are similar to the jewelry purchases noted on Exhibit B, page 40 for jewelry. Therefore, the documentation presented does not support an increase to the amount of audited purchases of coin and bullion. As regards the disallowed claim sales tax deduction noted on Department's Exhibit B, page 56, the appellant paid sales tax reimbursement of $274,689 with their sales and use tax returns. Yet the appellant claimed a deduction for sales tax included in gross sales of $288,140 for a difference of $13,451. The appellant claims the calculation used to prepare the returns included an incorrect formula to explain this difference. However, it should be noted that the appellant has not provided sales summaries, complete sales invoices, cash register tapes, and the like to support the amount of actual sales tax charged and collected. Additionally, the appellant has included a proposed refund of $1,323 with their argument with no documentation. As such, the department rejects the appellant's claims. Based on the evidence presented supporting the department's audit findings, the department asks that the appeal be denied. This concludes my presentation.
Thank you. Questions? Mr. Iyer, you have an opportunity to give a rebuttal to the department's argument. If you like, I can allow up to 5 minutes if you would like to use that time.
Very briefly, all I want to say is, at the risk of repeating myself, the 1.619 did not include the purchases that stemmed from exchange of jewelry for gold coins. For 2010, that amount is 58,337.50, and the sale value is 59,159, and that's the only adjustment that the taxpayer is seeking to adjust the audited bullion sales to 1,679,140 instead of 1,619,981, and that reduces the error dollar amount to 36,466, and the error percentage to 2.17%, bringing the total disallowed claimed exempt bullion sales to $265,255. And that's based on the documentation that is included in the invoices, which have been admitted to evidence.
Thank you. If there's nothing further from the parties, this concludes the hearing in this matter. All of the documents have been admitted. I am closing the record now, and my colleagues and I, over the next weeks, will deliberate and decide the issues, and within 100 days of today's date, we will issue a written decision and send it to the parties. You're welcome. Thank you. We're going to perhaps take a recess, perhaps a lunch recess. Do we know? We're adjourned in this hearing, and we'll decide whether we're going to proceed with the next hearing in 5 minutes or give a lunch break. Thank you all for coming.
Lynn, are you ready to get started, or do you need a minute? I'm opening up the files. Okay, take your time.
We're ready to call the case.
Our last case this afternoon is Andrew J. Laspino, case number 18093820, and Patricia M. Laspino, 18093737.
All right, good afternoon. We are on the record in the case of the appeal of Andrew Laspino and Patricia Laspino, OTA case numbers 18093820 and 18093737. And this is the Office of Tax Appeals hearing. It is 12:49 p.m. on January 29th, 2020. My name is Suzanne Brown, and I am the lead administrative law judge for this hearing. My co-panelists are Andrew Quee and Michael Geary, and we will be hearing the matter this afternoon. I am the lead ALJ, meaning I will be conducting the proceedings, but my co-panelists and I are all equal participants, and we will all be participating in reviewing the evidence and asking questions and reaching a determination in this case. Okay. First, I will ask the parties to identify themselves for the record. I'll start with appellant's representative. Mr. Mickey, can you please state your first and last names and your role here today?
First name Kai, last name Mickey. I'm the representative here representing the appellants, Patricia and Andrew Laspino.
Thank you. And for CDTFA?
I'm Sunny Paley, and I'm with Monica Silva and Jason Parker.
And are we hearing everyone okay? I wonder if the appellant's microphone.
Is that mine?
That's me.
If appellant's microphone?
Can you hear me now? Am I talking? I'm talking fairly loud. I can talk louder, but this would be the normal voice. Is that
Right.
true?
I think the microphone is.
I'll talk loud.
Okay. And you can hear him?
Yes.
Okay. And if
If it goes on different, then I might move back down.
just let us know. Yes, of course.
I've been told I have a big mouth, so just tell me you need me to speak louder.
Okay. So moving on to the substance of this case, everyone should have received a copy of the pre-hearing conference minutes and orders that I issued in this matter following our pre-hearing conference. The first thing I'm going to do is revisit the issues that we confirmed in the pre-hearing during the pre-hearing conference, and I confirmed in my pre-hearing conference order. And we identified three issues in this appeal: whether the February 2nd, 2007 notices of determination were timely issued to appellants, whether appellants are personally liable under Revenue and Taxation Code Section 6829 for the unpaid liabilities of CL Inc. for the periods May 1st, 1998 through December 31st, 1998, and January 26, 1999 through December 31st, 1999. And finally, whether there is reasonable cause to relieve the late payment penalties imposed on CL that were included in each appellant's liability under Revenue and Taxation Code Section 6829. Mr. Mickey, when we discussed these issues during the pre-hearing conference, you had indicated that you weren't sure whether you were going to proceed on all three issues. Obviously, the second issue about liability under Section 6829 is the crux of the hearing, but then I wasn't sure about the first issue about timeliness or relief of penalties. So can you confirm, are all three issues still in dispute?
Issue A is still in dispute. I will be talking directly to Issue A and to Issue B. Issue C is not something I'm going to be speaking to directly, but to the extent that the presentation for B can apply to C, it will. I realize that would require, I think, a 6592 statement, and which we can provide later if what I present for items B would be supportive of item C. I'm not going to speak directly to item C. I think it's kind of goes hand in hand with B.
The question that we need to determine here and now is this an issue at the hearing? Are you seeking relief of the penalties?
I guess for now I will say yes.
Okay, then I was going to, assuming now that I know that is the case, I was going to raise the question about a 6592 statement under penalty of perjury. I understand from the record in the DNR, it indicates that your clients did submit such a statement, and I see that the agency people are nodding, everyone agrees. And so from a formal perspective, it is my understanding that requirement has been met, and everyone's nodding, that there was a statement submitted under penalty of perjury requesting relief of the penalties. I don't have that statement in evidence, and I went through the evidence yesterday and I realized that it was not part of the record here. On the other hand, I do have appellant's statement under penalty of perjury that is Exhibit 4 and does not directly address the penalties, but I have a feeling that appellants are going to argue that the arguments regarding the arguments stated in Exhibit 4 apply the same to the penalties?
Yes, that is correct.
Okay.
I was not aware that there was a 6592 statement already filed. I was going to use their affidavit signed under penalty of perjury as that statement, and to the effect that that applies primarily to B. I believe the factors raised in that affidavit would also qualify for relief of C.
Okay. CDTFA, do you do you want to weigh in or respond here to this question of, first, do you agree that there was a statement submitted in 2008, and second, do you have any objection to me considering Exhibit 4 as appellant's statement under penalty of perjury regarding relief of penalties?
I do not have objection, but I would like to make a clarification.
Yes.
And I address it in my presentation, but just so that we're clear, of the issues under B.
Actually, can you speak into the microphone?
Yes, sorry, I'll slide over. So I address it in my presentation. However, regarding the liability periods under B, it is for the periods of May 1st, 1998 through October 1998. And then the only period at issue in 1999 is December 1999.
These were monthly returns.
Right.
So those are the only periods.
At issue.
I understand that, but let's finish the question about the penalty relief, and then we'll move on to clarifying that, because I don't want to forget where we were. Regarding the penalty relief, do you agree that, one, there was a statement submitted?
Yes.
It gets documented in the DNR?
Yes.
And second, that we can consider appellant's Exhibit 4 also as a statement under penalty of perjury as it applies to penalty relief?
Yes.
Okay. Then I think you don't have to submit a separate statement.
Okay.
Assuming that your arguments tie in to, for Exhibit 4, tie into penalty relief as well.
They all goes together in reality.
Now let us address, and I know I have these as A, B, and C, but in the opinion, they're going to be issues 1, 2, and 3. It's just the way that the numbering versus lettering worked in the pre-hearing conference minutes and orders. As to the time period at issue, I understand what you were saying. I just wrote it this way because I was being formal, and the time period formally not at issue under the supplemental decision and recommendation omitted only that short period from January 1st to January 25th, 1999. And everyone's nodding, so I take it you're all in agreement?
Yes.
Okay. But Ms. Paley, why don't you repeat what you were just saying to make sure that we are all on the same page?
So the periods, the unpaid liability periods would be May, July, August, September, and October 1998, and then December 1999.
That is my understanding as well, and Mr. Mickey,
I agree.
Okay. All right, then. Then if we are clear on clarifying, we've clarified what the issues are. I did also want to, before I move on to admitting the exhibits into evidence, I also wanted to clarify, again, what elements of Section 6829 are in dispute. When we talked about this during the pre-hearing conference as well, that the first two elements, the termination of the business and the collection of sales tax reimbursement, are not in dispute. Correct, Mr. Mickey?
Yes, that is correct.
Okay. And the second two elements you indicated are in dispute.
Yes.
Okay. And I just want to confirm that when we're talking about the third element, it's called responsible person, but it is it has the long language of whether appellants had control or supervision of or were charged with the responsibility for or had for the filing of returns or payment of tax or otherwise had a duty to act for the corporation. That is in dispute.
Yes.
Okay. And then regarding willfulness, I wanted to confirm that all three prongs of willfulness are in dispute: knowledge, authority, and ability to pay, funds available.
Knowledge is not in dispute. Authority and ability to pay are what's in dispute.
Okay. And I think everyone understands that the reason I'm spending this time now is so that we can all focus on what is in dispute and we don't have to waste time admitting evidence or arguing about what is not in dispute. So it is a question of efficiency and allowing the panel as well as the participants to focus. All right. Then I think I can move on to talking about the documentary exhibits. Everyone should have received the courtesy copy of the hearing binder that my office compiled. And it contains appellants exhibits 1 through 4 and CDTFA's exhibits A through G. The parties indicated during the pre-hearing conference, I believe we did not anticipate there would be any objections to any of these documents being admitted.
Correct.
Right. Okay, so I will confirm there is no objection, neither party has any objection to admitting these documents into evidence.
Correct.
Right?
Yes.
So there being no objection, I will say that appellants exhibits 1 through 4 are admitted. And respondents exhibits A through G are admitted. We also discussed during the pre-hearing conference that neither party was intending to call any witnesses during the hearing, and that is still the case.
Yes.
Right. So I won't be swearing anyone in as a witness. We will just be hearing argument. Okay? And I'll just briefly go over the order of proceedings that was also in my pre-hearing conference minutes and orders. Everybody understands that we'll hear appellant's presentation first, and Mr. Mickey, you'll have up to 30 minutes to make your presentation. And when you're done, there may be questions from the panel. Then CDTFA will have its opportunity to make its presentation, and I believe that will be up to 30 minutes, and there may be questions from the panel. And then appellants will be able to make a rebuttal to respond, and that will not exceed 15 minutes, and the panel may have questions for either party at that time. Does anyone have any questions about the order of the proceedings or any questions about how this process works?
Nope.
Okay. Then if everyone is ready, we can go ahead and begin appellant's presentation. Mr. Mickey, whenever you're ready, you have 30 minutes.
We're going to begin by talking to the issue of the timeliness of the notice of determination that was issued in 2007. I want to begin by saying that we're fully aware of the changes in Regulation 1702.5 and Section 6829 that took place effective January 1st of 2009. So we realized that as of 2009 forward, those provisions call for the 3-year statute of limitations based on date of knowledge. We're also fully aware that prior to that, that language was not in the statute, nor was it in the regulation. And prior to that 2009 date, we also know that the department routinely looked at the ability of having 8 years to issue a notice of determination for responsible person liability. That's not what the issue is here. We understand they're doing what they had always done. What I'm looking for today is to present to you the concept that that practice that was in place by the department prior to 2009 was misplaced based on the law. I have looked at the law myself, and I believe I know where they trace back through the statutes to get their 8-year statute of limitations during that period, but I believe that, again, is misplaced. Based on the concept of equity, and I'm not an attorney, so I don't pretend to know all the legalese behind these types of theories from a legal standpoint, but I know that there is a concept of equity that is behind many laws. And in the old periods, during which time this notice of determination would have been issued timely under this department's understanding of their timeliness, it was issued within the 8 years of the date of closeout. But using the 8 years is what we're taking issue with. When looking back at the statutes and the regulation, and looking at the equity behind those regulations, both to the state and to the taxpayer, it does not appear to us that a 8-year statute on a person being held liable for an entity, another person's liability, is justifiable when you're going to hold the individual liable longer than you held the originating person liable in the first place. To make that simplified, C-Elm had a 3-year statute of limitation on all these periods that are in question. Why is it rationally and legally justifiable to look at the statutes in a way that provides that the individual who is being held responsible under 6829 should have an 8-year statute to be held liable for that same liability? From an equity standpoint, that does not seem to make sense, nor from even a legal standpoint do I think that it makes sense. So when the department was utilizing this concept of issuing these NODs within 8 years of the date of closeout, they were operating under what they believed to be correct. They did issue this NOD within that understanding, but we believe that understanding was wrong. So I am asking you, as a separate now entity, looking at what the CDTFA BOE department had been doing prior to 1/1 of 2009, and see that their policy of how they were interpreting that is wrong. I have seen the write-ups. I believe a similar case has been before you guys, but it wasn't talking about the 8-year. It was just talking about whether or not returns of a corporation could be accepted as returns filed by the individual. I'm not saying that. I'm not arguing that same point. It's not saying that the fact that the corporation filed returns should be moved over to the individual as returns filed by the individual. We are simply saying that that individual who is being held liable under 6829 because of the abandonment or dissolution or discontinuance of the corporation should not face an 8-year statute when the corporation itself only faced 3. And if you can find that this department, during that entire period of time that was occurring, was misapplying perhaps that statute under their misunderstanding, then you can find that this notice of determination was not issued timely, because it was not issued within 3 years of the date of the closeout. And to be clear, although I think there is an equity argument here, I am not making it, then the fact that the 2009 amendments seem to make it pretty clear that there was not an intent, there was never an intent for taxpayers, individuals, people, persons, to be held liable for 8 years when the corporation to which the liability originated was only 3 years. I think that was the purpose of the change in the statute. I realize the change in the statute is not retroactive. I'm not asking it to be applied retroactive. It clearly says on and after January 1st. I'm simply saying that the interpretation that was being used prior to that was incorrect, and that this NOD was not issued within 3 years. It should have been issued within 3 years. The interpretation that was being used to justify 8 years was not correct. It should be adjusted, and this NOD should be canceled because of that. So that's what I had. That's my argument for the first one. Do we address that now, or do I move on?
You can move on.
Okay. So, barring your finding that the entire notice of determination should be deleted, canceled, based on the first position, we're now going to address the issue of whether or not both appellants, either or both appellants, were factually and really responsible persons who had the authority and the ability to pay the taxes. I will concede that the department is, and they're probably going to they could list a list of things they have in the DNR and the supplemental DNR that they put together to support their findings. We don't dispute that those things took place. There's no point in me sitting here saying that the documentation that they have doesn't exist. Returns that were filed weren't filed by the person signing it. We're not making that. That's not what this is about. So we concede that those factors are there. What we do not concede and what we will not accept is that those items are sufficient to dictate a finding that these two individuals, the appellants, should be held responsible as responsible persons. Whether you look at what I'm going to present here as a basis for supporting that they're not a responsible person, or whether you look at it in terms of they didn't have the authority or the ability to pay, doesn't matter to us. Okay? Because either one of them, if they're not supported, will eliminate the liability, because we all know that all of the elements have to be satisfied. So what I'm suggesting here, and in the exhibits, first of all, Exhibit 4, our Exhibit 4, which is the signed affidavit on penalty of perjury by the appellants. They have done a fantastic job recollecting over 10 and 20 years, okay, what took place during that period of time. They attempt to address some of what the department had put together during that period of time, and they bring in other information that is very, very relevant to this finding, that to date has not really been addressed, in our opinion. The case died within the BOE before we got to go to the oral hearing after the stuff was all presented. It just disappeared. We talked about that at the pre-hearing conference. I'm making an argument now against, this thing needs to go away because of that. But it is absurd that the case got pulled from the oral hearing calendar by the department and it disappeared for 4 years, and then it popped up over the OTA, resurrected. Okay? They again tried to recollect what had gone on, and we prepared the Exhibit 4. Originally, they prepared what's in the brief. They prepared the brief, which is synonymous almost with the Exhibit 4, except the dates were changed because it was 4 years later. In that statement, and also in the brief, you see that they've outlined what they were operating under, how they were operating this business. There's no question that they are the corporate officers of record. That's not a dispute. What has been overlooked all the way up till now, and perhaps it won't be overlooked now, is the fact that they did not have the authority or the ability to pay these liabilities that are in question. The DNR and the SDNR, they address that to some extent, but it is overlooking the foundation of the fact that the real person here that should have been sought after was the attorney who was representing these two appellants through the process early on. This gentleman, who I believe you can call him an officer of the court, he's a bankruptcy attorney, that the appellants hired him because they did not have the knowledge of how all of this worked. That individual explicitly told these taxpayers, these appellants, whether he was right or wrong, that they could not pay the liability in question. They followed the directives of that attorney. Subsequent to the first attorney, Dan Lucid, there were two other attorneys that came on board and followed through to the ultimate conclusion of the bankruptcies that took place sometime in 2000. What has been missed here is this concept that the taxpayers did not have the authority. They did not have the perceived authority. You can say that they were wrong. You can say that the attorney was wrong, but the fact is, these two individuals did not act willfully in not paying these taxes. They did not. They did not believe that they could pay them. And they've tried to address that all the way through. And 6829 should have been created to avoid the situation where individuals are truly, willfully not paying taxes that they owed. They know they owe it. They absolutely have the ability to pay it, the authority to pay it, and they just choose not to pay it. And yes, other creditors were paid because that's what the attorneys and the trustees working together were telling the appellants they had to do. They were not making these decisions on their own because they were told they could not. Now, I found another case, and I realize that you're not probably governed by federal cases, but there's a case here, and I'll give you the name of it. And this is going to, I didn't put as an exhibit because I actually found this in my last minute preparation. I figured you probably wouldn't take it anyway.
It doesn't have to be an exhibit. You can just give us the citation and the name and the citation.
That's Gray Line Company, Gray Line, Grayline Company, a corporation, appellant versus R.C. Grainquist, District Director of Internal Revenue. And the number is 237F2D390. And it's a 1956 case. And I don't know what the whole case is about. I didn't look at that. I was looking for information that has historically played to the concept of willfulness. When they do their presentation, when the department does a presentation, they're going to recite what it says, and they're going to say that it doesn't have to be a bad motive, and we know all that. Okay? We're not acknowledging that that's not what the law says, but that idea has not been further defined. And it can't be a catch-all for just saying, oh, it wasn't a bad motive, it doesn't matter, so everything works. So I was looking for information that helped you, and the department in the future, further define this idea of willful payment. And the one section of this court case that I'm going to read, it talks to this. It says, there was a letter that had been given to the taxpayer, I think, and they had been directed by attorneys to do something. And the court came back and said, appellee would spell willfulness out of appellant's failure to comply with the demand in the letter of June 30, 1948. Appellant, however, in relying upon the advice given to it, rather than upon the interpretation contained in the letter, does not show willfulness. Appellant's position was not arbitrary or unreasonable. It's exactly what happened here. The taxpayer tried everything to do everything that was right. They didn't try to wing it on their own because they didn't know what they were doing. They didn't understand the process. They were in a bind, no doubt, and they hired professionals, officers of the court, to help direct them through that process, all the way to the very end. And that officer of the court / attorney did exactly what happened here. Gave them the advice, told them what they had to do, didn't really give them an election to do anything else, and that's what they did. And they were not unreasonable. It certainly wasn't a bad motive, but we know that's not enough. It was not unjustifiable. It was not negligence. They did what they were being told to do. So I have seen other cases where the issue came down to whether or not someone had to ask permission to do the things that they were being told they had to do. Did they have the final authority? Okay. That, in this case, is the key point. They did not understand that they had the final authority. They were going by the officer of the court who told them they did not, that they could not do this. And they followed exactly what they thought the courts were telling them, and the department now is saying that's not enough. And that's what we dispute. So I would hold that the fact that these other individuals had taken on this role of guiding the taxpayer not just as friends, but as professionals, officers of the court. I keep throwing that out because this is what this is. This is a designated, licensed individual that is supposed to understand these rules and the interpretations and laws, and this is what these taxpayers hired to tell them what to do, and they did exactly what they were told to do by that. And now we have a somewhat of a court and a jurisdiction coming back and saying that doesn't work. And there's a conflict there. And 6829 and the subsequent 1702.5, in our opinion, is not designed to catch that kind of a situation. That's exactly the kind of situation that it is designed not to catch, to have these justifiable reasons for what they did. So all the other information that the department has, returns signed, they're on the permit, all that stuff, that all sort of gets trumped by the fact that maybe that's enough to show that they started out as a responsible person, but at the end of the road here, or during the middle of this road, they became individuals who did not have the authority to make happen what the state wanted to happen. And now they're paying the price for it. And they've been paying the price for 20 years now for this. And I know that there's other things that the state's going to bring up, about how the bankruptcy works. And I have told my client, I'm not a bankruptcy attorney. I don't know how the bankruptcy works. I don't know what protections there are, what stays there are, all that. But I do know that when you hire an attorney, and the attorney and the trustee take on this role, that your authority has been diminished or lost. There's a statement in the DNR or the supplemental DNR that talks about how there were other bills paid, but they don't have evidence that the taxpayers told the trustee what to pay or what not to pay. They never did any of that. That's what the attorneys were doing with the trustees. And all that was happening was they were being told what to do by these individuals, and that's what they did. So the rule of authority goes back to Dan Lucid and to the trustees. And Exhibits 1 and 2, Exhibits 1, 2 in our package, those are the letters that were written by Dan Lucid, the attorney, written to show that what was going on was exactly what the taxpayers were saying. Dan Lucid was telling them, you could not do this. You can't do it. He took on the role as the authoritative person who should have, maybe, made the taxes paid to the state, but didn't. But the appellants did not make that decision. They did not have the authority. So, based on that, we would hold that regardless of whether you find that they're responsible persons, regardless of the fact that they knew there was liability, they were filing the returns. We can't argue that they didn't know the returns were not being filed, or the returns were being filed, not paid. But they did not have the requisite authority or the ability to pay. And even if you want to say they had the ability to pay, because ultimately they were writing checks, they weren't able to write these checks without getting the authority from the trustee through the attorney, and they were nothing but pawns to the trustee and the attorney's plan of how to resolve the dire situation that the corporation found them in. And to come back now, or come back 7 years later, to these individuals for those taxes is not what the statute nor the regulation should have ever been intended to capture. It was not. And we believe that we have shown how all the information that the department has is not sufficient to satisfy the authority and the ability to pay element which must be met. And for that reason, we believe that all of these periods should be deleted, removed, canceled, however you want to refer to them as. There should be a re-audit where they don't owe anything at all. Thank you.
Thank you, Mr. Mickey. I'm going to go ahead with a couple of questions, and my co-panelists may have some, I don't know, and then after that we'll move on to hearing CDTFA's presentation. I wanted to ask about the period before the bankruptcy filing in 1998.
Can I step back a second?
Sure.
Because I forgot to mention a couple things.
Okay.
It's in the letter, but I should clarify something. There was, and I apologize, there was a question about the timing of the bankruptcy and the timing of the returns that were filed in here. You will see in their letter, you would have seen what I'm going to say now because it's in their affidavit.
Yeah, and you mean Exhibit 4, I understand.
Exhibit 4.
Right, I'm just saying the letter because there's two in the record.
I'm sorry, you're right, Exhibit 4.
Mm-hmm.
So you will see that there initially was a question about when the bankruptcy filings were made. And there were 2 filings made. And there was a question about whether one was dismissed or transferred, and there's a distinction between the 2, and debtor in possession comes up. All that has been addressed. We acknowledge that that's been addressed. But the key is, and that we will see in their Statement 4, is Dan Lucid came on board in around August of 1998. Okay? August. He didn't come in at the end of August of 1998 when the initial filing of the bankruptcy was done. He came on board in August 98. And that is when he began counseling and advising the taxpayers as to what to do. So when you look at the May, and if you look at the May return that's in question, it's only $41 and a late penalty is left. And July is a small amount of penalty as well. The tax doesn't start until August of 1998. So that return became due in September of 1998. Well, Dan Lucid came on board in August. Now, even though the bankruptcy wasn't filed until October, the first bankruptcy was filed in October, he was already counseling them in August. So when the August return came due in September, he was already advising them that they could not pay these pre-petition liabilities because he was preparing to file the bankruptcy in October. So once again, maybe that's right, maybe that's wrong, but that's what he was telling them to do as that officer of the court, irrespective to the bankruptcy proceedings that he was working on and that he ultimately filed. So I don't know if that will answer your question, but that's why August and September, and I guess even in October, you would say, if you looked at the December date, why they weren't handled. They weren't handled because Dan Lucid was already representing them and told them they couldn't do it. And they followed what he said.
I think that is essentially what I was asking
Which
about.
I think I should have mentioned, yes.
Okay. Let me ask about the December 1999 sales and use tax return that was due on January 31st, 2000. So if I understand your argument correctly, you're saying that the whole period when appellants were debtors in possession under Chapter 11 prior to the Chapter 7 conversion in that 1999 period, that all of the taxes being paid were under the attorney's instructions per the attorney's, I don't know what the technical term, the attorney's communications with the trustee?
I can't directly answer that because I don't know what all conversations were had during the later periods. I know that they had attorneys that entire period. There were 3 attorneys, I think, that ended up being involved towards the end. The bankruptcy wasn't finalized, I think, until April of 2000, right before the business was closed out. I don't know what went on during that later period, so I don't want to attest to that, but I know that they were under the direction of the attorneys the entire time.
But you get where I'm asking about, because there were tax periods in 1999 that were paid.
Yes.
And then December 1999 was not.
I don't.
But that was long before the conversion to Chapter 7, so I don't think that was the reason what changed for December 99.
I don't specifically know that, other than I don't know what the conversation would have been, why that happened. I don't know. I'd rather say I don't know than try to give you an answer that I know. Because the entire time, they were under the guidance of the attorneys. There was a point in time where they were allowed to run the day-to-day business operations, and perhaps that was why the period in 99 was being filed, because they were not pre-petitioned. I think that's actually addressed in their letter now I think about it. So that, so why the 1999 one wasn't filed, perhaps that has a different bearing or answer than the earlier ones, which is the majority of it. I don't know.
I did have one clarification. I'm not understanding when the bankruptcy was filed, because it looks like there's a number of petitions that were filed. One is from, looks like, December, and then another one from November, and then there was another petition that was dated in October, it looks like, and the decision that CDTFA had said the bankruptcy was filed the following year in January 25th of 99, I believe. So I'm really confused why there's so many bankruptcy petitions, and I'm just wondering if the parties agree when there actually was a bankruptcy filing that was in place.
In Exhibit 4, they outlined the time frame for that. What happened was, and I don't know the specific dates, but there was a bankruptcy that was filed in October, and it was filed, I think it was October, and it was filed in the wrong court. It was filed in Northern California, I think. So they got dismissed, and they refiled it in December, I think in Southern California. Or flip-flop, I don't remember, it might have been flip-flop. But there was a filing, it was dismissed, and then it was refiled, and that one that was refiled is the one, I believe, that followed all the way through.
Okay, and so if I'm understanding, you're saying that with respect to even the October filing, they would have been precluded from paying the liabilities for that month, or for, I guess, September, which would have been due in October, because the bankruptcy attorney was telling them they can't pay pre-petition debts, and at the time they had an active bankruptcy, they would have been precluded from making that payment. Is that what you're getting at?
I think so. What we're saying and what we're explaining took place was that during that entire time, from August of 98 all the way through, at least until for the 98 periods and the first part of 99 periods, the attorneys had taken on the role of telling the taxpayers what they could and could not pay. Whether or not that was right or wrong, I don't know. I can't attest to that because I'm not a bankruptcy attorney. That's why we had Dan Lucid write the letters. He's explaining why he did what he did. I don't know if it's right or wrong. But the taxpayer followed their guidance. That's what we're saying right there. And the timing of the actual filings of the petition for bankruptcy, that wasn't in the mindset of the taxpayer as far as what they were doing. What was the mindset of the taxpayer as far as what was going on was that regardless of those multiple filings, they were being told they couldn't pay these.
Okay, and so I'm looking at your exhibit number 1, which is the letter from Daniel Lucid dated May 18th, 2011, for example, one of the letters. And under bullet point 2, he was saying CM was prohibited by bankruptcy law from making tax payments on pre-petition tax debts to any government agency except by order of the bankruptcy court. Is that what you're referring to in reference to your argument that they were directed they could not make payments?
Yes, I mean, that's part of it. His letter is the whole thing.
Okay, so it seems that this is referring to payments that occurred after the filing of the bankruptcy petition, because they're talking about except by order of the bankruptcy court. I'm wondering if there's anything in the file there where the attorney was directing the client that they can't make payments before the filing of the bankruptcy, or this is what you're relying on?
Well, all we have, this is a long time after the fact. Dan Lucid is not available. He wouldn't do anything more than this, so we couldn't get any more clarification of what happened than this. Dan Lucid is not available now for us to get a hold of. And in the affidavit of the appellant, they talk to that. So this is the key, whether something was pre-petition or not pre-petition in the eyes of the bankruptcy court, that's really not what is at issue. When these items were not being paid that are in dispute, the taxpayer was being told by Dan Lucid that these were pre-petition liabilities that could not be paid. What impact the dismissal of the first court case and the filing of the second bankruptcy court case had on that definition, that was determined after the fact, and that didn't change the fact that they had already not paid him, because that's what Dan Lucid told them.
Thank you. Do you mind if I ask CDTFA to address something in their opening presentation? Okay. Just a clarification for CDTFA. I'm just wondering if CDTFA in their opening presentation could address whether or not the filing of the bankruptcy in October would have affected his authority or ability to pay the the liabilities for example, the October or September liabilities, which would have been due after the filing of that petition, or if that is relevant in your position, CDTFA's position, to his responsible person liability.
I do address it in my...
Okay, thank you.
We can go ahead with CDTFA's presentation, and I'll just note you have 30 minutes.
Appellants were corporate officers of C. Elm Incorporated and ran a floral business called Floralesque in Carmel, California from 1996 to year 2000. The corporation's seller permit was closed out effective April 10th, 2000, Exhibit G, Dual A, page 8. During certain periods between May 1998 and December 1999, the corporation failed to remit sales and use tax it had collected. The department holds the appellants personally liable for the unpaid corporate liabilities that originated from non-payment of sales and use tax returns filed for the months of May, July, August, September, and October of 1998 and December 1999. As you are aware, personal liability under Section 6829 requires 4 elements. The corporation must be terminated, the corporation must have collected sales tax reimbursement, the person must have been responsible for the payment of sales and use tax, and the person's failure to pay must have been willful. The first 2 elements are not in dispute. As to the third element, the evidence establishes that appellants were the persons responsible for the corporation's payment of sales and use tax. A responsible person means any person having control or supervision, charged with the responsibility of filing returns or payments, or had a duty to act for the corporation in compliance with the law when the taxes became due. Both appellants were the only corporate officers of the closely held company, as demonstrated by C. Elm's seller's permit application and the Secretary of State filings, Exhibit G, the Dual B and C, pages 9 and 10. The appellants conceded during the appeals conference that they were the officers of the corporation with responsibility for sales and use tax compliance. Ms. Laspino signed each non-remitted return at issue, Exhibit G, Dual J, pages 26 through 44. Since appellants were the only 2 people running C. Elm, each had the control and duty to ensure compliance with the tax laws. No one else had responsibility for C. Elm's business operations, even while in bankruptcy proceedings. And I'll discuss the bankruptcy in greater detail in a moment. As to the fourth element, failure to pay is willful if the person had knowledge that the taxes were not being paid and the authority and ability to pay, but failed to do so. No bad purpose or evil motive is required. Willfulness is defined and controlled by statute in California. The California law is what controls. And I haven't had the opportunity to review the gray line case that was cited, but I would note that it is a federal case and in federal court. So that is a distinction to be made just off the bat there. I would also respond to appellant's contention that the questionable or bad legal advice that they may have received does not negate or relieve liability. That would be a separate civil action for them to take against that counsel. With respect to knowledge, it is no longer in dispute. With respect to authority, we acknowledge the bankruptcy proceedings. However, it does not afford the relief sought by appellants. With respect to appellants' contention that after the corporation's bankruptcy, they are no longer personally liable for the debts of the corporation, we shall discuss the effects of filing a bankruptcy under Chapter 11 of the Bankruptcy Code. A case filed under Chapter 11 of the Bankruptcy Code is frequently referred to as a reorganization bankruptcy. A Chapter 11 case begins with the filing of a petition with the bankruptcy court, which is filed by the debtor. The filing of a petition under Chapter 11 triggers an automatic stay of creditor actions against the debtor for most pre-bankruptcy petition debts. The filing date essentially sets up 2 classifications, pre-bankruptcy claims and post-bankruptcy claims. Appellants initially filed bankruptcy in the Central District on October 30th, 1998, which is shown in Appellant's Exhibit 2, page 3. That's when they initially filed, erroneously. Not even 2 months later, on December 15th, 1998, the court dismissed and vacated that petition in its entirety to improper venue. And that's in Exhibit C, the Supplemental DNR, Exhibit 2, page 20, and Appellant's Exhibit 1, page 2. The corporation then filed for Chapter 11 reorganization bankruptcy in the Northern District of California on January 25, 1999, Exhibit G, Dual E, page 16. The department maintains that the January 25, 1999 bankruptcy filing in the Northern District is the bright line that separates C-Elm's pre-bankruptcy petition debts from its post-bankruptcy petition debts. Given that the Central District case was dismissed as improper, it's therefore inconsequential to this appeal. What's at issue are 6 non-remittance monthly returns, 5 pre-bankruptcy returns, May, July, August, September, and October 1998, and 1 post-bankruptcy return, December 1999. What's important to recognize is that the 5 1998 non-remittance returns were due and payable prior to the bankruptcy filing. And in fact, May 1998 would have been due in June 1998, which even precedes Mr. Lucid's purported advice. I would also note that Mr. Lucid apparently was the attorney responsible for filing the erroneous Central District filing, but was not counsel subsequently in the Northern District, as noted in the same exhibit of the filing dates. Upon filing a Chapter 11 petition, a debtor also automatically becomes a debtor in possession, and the filing triggers an automatic stay of creditor actions against most pre-bankruptcy petition debt. And those debts are addressed by the plan of reorganization, and generally the debtor in possession is prohibited from paying those debts. A debtor in possession is, however, expected to act as a fiduciary and continue to operate the business with the same rights and powers. To be clear, in this case, the bankruptcy filing did not prevent appellants from paying or relieve the liability of pre-bankruptcy liabilities that were due and payable prior to the bankruptcy filing. In this case, the May, July, August, September, and October 1998 monthly returns were due prior to the bankruptcy filing. The appellants, therefore, had the authority to pay the liabilities when they were due, and they should have been paid prior to the bankruptcy filing. For example, the August 98 reporting period became due and payable on September 30th, months before the bankruptcy filing. And even the October 1998 return, due and payable on November 30th, was prior to the January 25th bankruptcy filing. Regarding post-bankruptcy filing debts, pending the confirmation of the reorganization plan, the debtor in possession is allowed and expected to continue to operate the business and pay post-bankruptcy petition debts, including taxes. The post-bankruptcy non-remittance return for December 1999 falls into this category. As established by the evidence and in accordance with bankruptcy law, appellants did not cease to perform the duties and obligations of running C-Elm during the 14 months between bankruptcy filing and the later conversion to Chapter 7 liquidation. This is evidenced by the sales and use tax returns filed and paid for by the appellants during 1999, contrary to their claim of non-control post-bankruptcy filing. Again, that's Exhibit G, Dual J, and I, pages 26 and 25. Appellants, therefore, had the authority to pay the December 1999 return. At all relevant times, appellants had the authority to pay the liabilities at issue at the times they were due. With respect to the ability to pay, at the times the taxes were due, C-Elm had funds available to pay the taxes, but instead used the collected funds to pay other creditors. EDD records and Exhibit G, Dual K, pages 45 to 51, show the corporation had funds available when the taxes were due and thereafter, because the corporation paid wages of its employees exceeding $90,000 during the liability periods. The sales tax due is about $6,800. Suppliers were also being paid, Exhibit G, Dual L, page 52. And let us not forget that the sales tax reimbursement was collected. Regarding the late payment penalties, the Notice of Determination, Exhibits E and F, issued to appellants include 10% late payment penalties of approximately $690, which were incurred by the corporation for failing to timely pay the tax due with the non-remittance returns filed. Section 6592A allows for relief of late fee liability if reasonable cause is found. The required statement under penalty of perjury, allows for relief of late penalty liability if reasonable cause is found, the required statement under penalty of perjury is provided, and there is a determination that the failure to pay was due to circumstances beyond the corporation's control and occurred despite the exercise of ordinary care and the absence of willful neglect. The required statement under penalty of perjury was provided. In the statement, appellants make the same arguments in support of relief from the late payment penalties is made for the relief from personal liability, as was done here today. In short, that the bankruptcy caused non-payment. As discussed previously, C. Elm's bankruptcy did not impact appellant's authority or ability to pay its taxes. And further, nothing in the record indicates that the corporation's failure to timely pay was due to reasonable cause. Regarding the statute of limitations issue raised, Section 6829 was amended by the Assembly Bill 1895 in 2008, adding subdivision F, providing a specific statute of limitations for the section. The 3-year statute of limitation from the department's actual knowledge of termination, or 8 years from the corporation's termination, whichever period expires earlier, with an operative date of January 1, 2009. The law is not retroactive. The legislature had the opportunity to act, and that is how the law stands. Since the NOD in this case was issued on February 2, 2007, prior to January 1, 2009 operative date, the shorter 3-year statute of limitations added by Assembly Bill 1895 cannot apply. Prior to January 1, 2009, the statute of limitations for issuing a determination commenced on the last day of the month following the quarterly period in which the business terminated and ran for 3 or 8 years, depending on whether or not the responsible person filed a return in his or her name. In this case, termination was on April 2000, and because there's no evidence that appellants filed a sales and use tax return as individuals, an 8-year statute of limitations applied for the issuance of this determination, and the authority being Section 6487, Subdivision A, and the memorandum opinion in Hosmer, Chandler, McCoon. So the department had until July 31st, 2008 to timely issue a notice of determination to any persons liable for C. Elm's unpaid liabilities pursuant to 6829. The NODs, Exhibits E and F, were therefore timely issued on February 2nd, 2007. Regarding relief of interest, the department has acknowledged an unreasonable delay from 2014 to 2018 and relieved interest for that period, as allowed for under law. However, that does not change the fact that appellants are personally liable for the remaining amounts at issue. For these reasons, we request that the appeal be denied.
Thank you.
Hold on. You want to go first?
Go ahead.
Yeah, I would like to follow up on the question I had asked right before your presentation. So from my understanding in the decision, the pre-petition period of January 1st to January 25th, 1999, they filed bankruptcy on the 25th of 1999, and CDTFA deleted that first month of 99 on the basis that they didn't have authority to pay when that January payment became due in February of 1999. Is that correct?
Yes.
So I'm just trying to analogize that, or I'm not trying to understand why when they filed bankruptcy the first time in, I believe you said October 30th of 1999?
It was.
1998, I'm sorry. Why that wouldn't have prevented them from paying the pre-petition, at that point, pre-petition liability for the month of September, which would have been due on October 31st, the day after filing that bankruptcy petition. That would have been the pre-petition debt. Where would their authority to pay that liability have been, because the automatic stay would have still kicked in at the time of the bankruptcy filing, and that wasn't thrown out until December 15th. So I'm having a hard time comparing why January 99 was thrown out, but why October 98 was not thrown out.
And we believe that, the evidence is clear that that case was erroneously filed and dismissed, and no protections given. And we believe that to allow that to stand and to allow a relief to stand, and that would open the floodgates to a liability without any merit. So people could just file an erroneous bankruptcy to try to stay off that liability, which would be inappropriate. The case that went forward is in the appropriate venue was the January 25th, 1999.
So I guess what I'm not understanding is even though it was thrown out later, and maybe on the 16th that he could have paid, but I'm just thinking there still is an automatic stay that kicks in when he files bankruptcy, and that would have applied, unless I'm misunderstanding something, until the case was thrown out, or am I not understanding what the how the stay operates.
I would also add, I mean, our position is that there was, nothing happened in that, short amount of time. And once it was dismissed, there was time also and authority and ability to pay. And they actually filed returns and paid the November 1998 return. So they knew after that was dismissed that they now had the ability to, to make payments and the authority to make payments. And while they filed non-remittance returns, they filed returns and they did pay 1 month, filed the return and paid the month before they filed the bankruptcy on January 25th. So even if we want to say there was some type of pre-petition liability that couldn't be paid, although that's not our position, there's enough time in between where they then gained the authority and ability to pay. And they did, some of it.
Okay, thank you. I had only been asking about September, but I understand what you're saying now. And I did have one other follow-up clarification. I understand there's amnesty interest penalties here, and in the decision and supplemental decision, it indicated that CDTFA was conceding it, provided it was paid within 60 days of the decision being final. Is that still the position of CDTFA?
Yes, that's still the position.
And what document would trigger that? Is it a document OTA is sending out, or is it a document CDTFA is sending out that's going to trigger the running of the 60-day period to pay the liability?
Our document that goes out once your decision is filed.
Okay, thank you.
Back to the liabilities.
Okay, thank you. I just wanted to clarify for the record so the taxpayer would know in the event it went that way. Thank you.
I guess I want to ask CDTFA if you can address a little more this concept of perceived lack of authority. Are you saying that essentially whether, in a strict legal sense, if the taxpayers have authority, it doesn't matter whether they have any reason to believe that they don't have authority, like, say, from the advice of an attorney?
And I tried to address that as far as...
I heard earlier you said if they were relying on bad legal advice, that's not any sort of defense, and that that might be grounds for a civil claim against the attorney.
Yes.
But there's no circumstances where relying on, let's say, hypothetically incorrect legal advice could ever establish lack of authority. I mean, no circumstance relevant to this kind of case.
No, but all the more so in this particular case where we've seen that they had the authority and did so, as evidenced by their filings, their sales and use tax return filings post-filing, January 99, as well as what Ms. Silva was just speaking of, that they in fact filed those returns, albeit late, but filed them themselves and made a payment for the November date.
And I think you were talking about this earlier with Judge Quee's questions, but I wanted to make sure I followed about the October. He was asking about the September 98 sales and use tax return, and I wanted to make sure, and I think you were responding addressing the October 98 return.
Well, October, the Central District October 1998 filing, again, was dismissed, vacated in its entirety, so we believe that does not afford them any protection.
So, but the October 1998 return was due in November of 98.
Yes.
So,
yes.
But the automatic stay for the October 98 filing in the Central District for the bankruptcy court, that does apply, correct?
We believe that it does not. We believe the controlling date is January 25, 1999. For that is the case that went forward.
As I explained earlier, even if that is the case, you find that is the case, the taxpayers here then gained their authority and ability subsequent to the dismissal and actually used that. They recognized they had the authority and the ability because they filed returns before the January 25th filing and even paid one of those returns. So they understood that they had authority.
Your concept that if you file in the wrong venue, that the automatic stay does not apply, is there any authority for that you're aware of?
I think for us, it wasn't even transferred. It was like it didn't exist. So, maybe there was a stay. I don't know. Apparently, maybe the attorney knew that or felt there was and didn't do anything. But they filed other returns afterwards. So, I don't know that it really matters here at the end of the day because they had authority at a time before they filed then the next. Even if you want to say there was a stay and they couldn't file, then subsequent to the dismissal, there was time before the next filing. Because once it was dismissed, there was nothing. So they had then gained the authority and ability, and they actually used that authority and ability by paying. So, even if you want to say there was a stay, it doesn't matter here because they lost it when it was dismissed, and there was time before the next filing, and they actually recognized that they had authority and ability, and they filed returns and paid a return.
Then I'll say we can proceed to appellant's rebuttal if CDTA has nothing further. Mr. Mickey, you have 15 minutes.
First thing, when the department is using the pronoun they, they knew they had authority, they did this. It would not have been they. It would have been still at that time Dan Lucid, the attorney, directing the taxpayers what to do. Now, much of what the department said in their write-up, we don't disagree with. I told you that at the very beginning. I knew what they were going to say, all the things that they found, and the case that they built. We don't disagree with a lot of that. But I do disagree with a couple of things. First, I disagree fundamentally with the idea that there cannot be control taken away and authority taken away from somebody and passed on to somebody else during times like this. In this case, again, I need to stress this because this is really what the heart of this is. We do believe that there were stays put in place because of these filings. Even if there wasn't, we still hold that the taxpayer was told there was by this officer of the court. But I believe there was. And I believe that during the period of time where the department says they knew that they had authority, so they filed returns, perhaps that was in between the two filings, and so they filed it. It didn't change the idea to them through their attorney that the periods that were issue right here are still pre-petition because they were going to file another bankruptcy. Maybe that is not how the bankruptcy works exactly, but that's what Dan Lucid was hired to tell them until it got up to that other jurisdiction and they brought in, I think it's Paul Cass to do it. Okay, so I disagree that the idea that authority couldn't have been taken on by somebody else. And the idea that it's a civil case, maybe there is. Okay? But we're still talking today here about the civil matter between the state and the taxpayer. And that has its own foundational basis for being sustained or not sustained. And when you find that they didn't have the authority, you can't hold them liable because they could have had a civil case against the attorney. That's totally two different things. They're either liable under the state's rules or they're not. What happens in civil court is totally different. And I'm showing here that the one element of, or the two, authority and ability to pay, have not been satisfied by these two appellants. And so some of what they were saying, I think, is misplaced from the perspective of looking at this concept of authority to pay. In their presentation, they mentioned that there are 5 pre-bankruptcy amounts. 5 pre-bankruptcy amounts compared when looking at the January filing, I suppose, because there's pre-bankruptcy to the October filing, which is July, August, September, and October. Okay? Because remember, the filing at the end of October that was going to cover September and August and July and May, making those pre-petition liabilities. Now, I want to just clarify something here. The May liability, we focus a lot on the May and on the July. The May liability is $41.33 in late penalties. Okay? Not significant dollar amount. The July 98 penalty, unpaid penalty, is $15.41. So what's the gist of what's at issue here is the August, September, October, and the December 99. So we really have three main tax amounts that are at issue, and they are all three pre-petition when you look at either the October date or the January date. And when they got out of the first bankruptcy, perhaps Dan Lucid told them to file the November and the December because there was no bankruptcy there, but the other debts still remained in their eyes as pre-bankruptcy, and so they weren't taken care of. So even though there's this window of time that the department is talking about, the taxpayer did not know what that window of time was because they were told, they were not advised to use that window. In fact, they were advised not to use that window and to pay these pre-bankruptcy because they couldn't. So there's this idea of whether it was right or wrong, and then there's the idea of whether the taxpayers knew it was right or wrong, and whether they are the ones with the authority. They didn't know it was wrong, and they didn't have the authority, still, despite what the department has raised in their conversation. And to Judge Quee's notes, when talking about the September and October versus the amounts due to the due date or the filing of the bankruptcy, both of them would apply because the bankruptcy for October would have been November, and for September would have been the end of October, and the bankruptcy filing was filed before October 31st, so both of those would have been pre-petition bankruptcy amounts for the October filing of the bankruptcy. Okay, and then the other thing, I wanted the concept that the erroneous filing of a bankruptcy to gain protection that you wouldn't otherwise have. I mean, maybe there's some merit to that, and that's what the court should rule out, right? That's not what happened here. There was not an erroneous bankruptcy filing made for that purpose. There was an erroneous bank filing made, and I hate that word because that word is definitely a negative connotated word when people use it. They made a mistake. They filed in the wrong court. I don't suppose that's the only time it's ever happened. And to say that it was erroneously filed and therefore all the subsequent protections and rules that apply to bankruptcy wouldn't apply because it was found to be an error and they filed another one, that doesn't make legal sense to me. And so I would just hold that they filed the bankruptcy, the protections took place, whatever they were out of bankruptcy, they filed the returns for the periods they were out, took care of them, they re-entered bankruptcy, and they were back in the control of the courts, and they were operating as they were told to operate by the attorney and the trustee. And so we're right back to the point where the appellants did not have the authority and the control. And to address the memorandum opinion, I also have the memorandum opinion, and it's interesting in the memorandum opinion, it goes to talking about the statute. So real quick, I want to talk about that too. We did not come here and say that we wanted the statute that's provided for by the new 6829 to be retroactive. I know it's not retroactive. I said that. What I am suggesting is that the concept that there was 8 years based on 6487A is misplaced when you're looking at responsible person. And the fact that the prior board members decided to put together a memorandum stating that that's the way they interpret it didn't create the law, and it's still subject to question, and perhaps the memorandum opinion is wrong as well. Because that is clearly what the state's position has always been. They had 8 years. We're saying that position was wrong. It should have been the 3 years, the same 3-year statute that the business had. Now, if the business didn't file returns and they had 8 years, then you would hold the individuals as having the 8-year statute. But this business had a 3-year statute. And so we're holding that they should have a 3-year statute against the individuals under responsible person. Not because of the change in the law, not because of the memorandum opinion. Even the memorandum opinion makes an interesting comment where people should just file personal returns after they close a corporation. If they file a personal return, it starts a 3-year statute. Well, that's kind of dumb. They even mentioned that they don't have a form for that. So there's no return out there for individuals to file for, quote, responsible person liability. There's no information out there at all. It's silent to that. You have to dig it out from the 6487 and try to apply it. So even the board members recognize that there should have been maybe a provision to tell taxpayers, hey, you better file this 3-year, because that's really what it should be. But we're just holding that the use of the 8-year was wrong. It was a wrong interpretation, and it's been wrong the whole time. So everybody who got billed under an 8-year statute, it was wrong too. This one happens to still be in the process because it's taken 20 years to get here, and it should be corrected. That's what we're saying there.
Thank you. Yeah, go ahead.
Sorry, just one question occurred to me. Did either of your clients, Andrew or Patricia Laspino, did they have any other businesses where they filed sales and use tax returns with CDTFA during this time period, like as a sole proprietorship?
Good question that I don't know the answer to, but I can certainly find that out. I don't know that answer.
I was only asking in context of whether or not you could have argued that they triggered the 3-year statute because they filed a return in their own name, and that's the reason why I asked. But okay.
Can I put that on record to the extent that if they did, that the 3-year would kick in then?
I was asking in the context of wondering that if you don't have evidence on that in the record, I'm not sure what we would do. I'll turn it back over to the lead.
How can I address that? If I don't know, I don't think that is the case, but if it was, how can I have an opportunity to address that, or can I put on record here that to the extent that they did have, which is record with the department, that would trigger the 3 years?
I don't.
We're not here prepared to make a ruling on your case today. I was just asking a factual question.
No, but can I add that to my argument in defense of the timeliness, to say that to the extent that the taxpayer did have their own personal return permits and filed returns during that period, that should be factored into establishing the 3-year statute of limitations versus the 8 years?
You could make that argument, but if we were required to rely on the facts and the evidentiary record, and if we don't have any evidence of that, we can't make a finding to that effect. So you can make that argument, but we're required to rely on what's in the evidentiary record of making a factual finding as to what did or didn't occur.
Is there a mechanism for that information getting to you? I mean, the department would know this too. I think I'm not going to speak for them, but I would hope that if they had their own permit and filed the 3 years, that they would agree, I mean, the memorandum of opinion says that they would agree that it should be relieved.
The lead has the authority to hold the record open if the parties were open to that, to receiving additional information. I would defer back to the lead at this point.
Well, I'd like to ask if we could leave it open. I will find that out and present that ASAP, and to the extent that it would get us a right answer, I would hope that the department wouldn't object to that.
All right.
Right answer here.
I'll let CDTFA respond.
We have no evidence of the existence of such.
And you've been representing the appellants for over 10 years now.
Yeah, they had long since stopped doing anything by the time I got involved.
So wouldn't you have, go ahead.
Mr. Mickey, what would you propose to do from your end, since we can't require the department to offer any evidence?
Right.
What would you propose to do if you were allowed additional time to marshal evidence on the issue?
Well, I would simply contact my clients, first of all, and ask them if they had a permit during that time. I don't believe they did, but
this is what I was getting at is if...
But I don't want to say that for sure, and I would welcome an opportunity to find that answer out. If they tell me no, then I would just respond to you, no, enter that into evidence, and that point is moot then. If they did, I would find out what the permit was, and we could enter that into evidence.
All right. If there's no objection from CDTFA, and it's my understanding there isn't, I would be willing to leave the record open for 15 days to resolve this. I just, if you've been representing your clients for over 10 years, I would have think they would have raised it to you by now?
I believe so, and I'm not so sure that I haven't addressed it, but I just...
And I haven't seen any evidence of it. But I suppose I don't have a problem with, as I said, I'll leave the record open for 15 days, and within that time period, yeah. Okay, we'll get to that in a minute. Within that time period, you should, communicate with my office with a copy to CDTFA to indicate whether you have any evidence on that point.
I will probably know an answer within the next 2 days that I can send you. If they don't have it, then we're done.
Okay.
If they do, I'll have to contact the CDTFA and seek out the returns and for that period of time.
Okay. Yes, go ahead. You have a question.
Ms. Paley discussed interest relief in her argument, but it's not listed as an issue before us. Is the interest relief question resolved already?
Yes, as long as we're going to live by their memorandum. The only other item I would bring up is we talked about this at the pre-hearing. I tried to pick my arguments here to try to focus on things. There's several months before the OTA got to me about the case subsequent to the date addressed in the letter, that they relieved the interest. So I would hope that there could be consideration of that extra few months between the last date that they cite in the letter, which I don't have with me right now, and the time where the OTA actually sent me the notification that it had gone over to you. I think it was 3 to 4 months difference.
Then I guess I was going to ask CDTFA, is there any evidence in the record of when CDTFA sent the appeal to the Office of Tax Appeals?
But the last date that we had reflected within our letter relieving that liability?
I saw that in the letter, but I don't...
No other information.
Okay. Because I didn't know what that was based on, and I couldn't find anything in our records. All right.
I did not bring up the interest issue because I presumed, perhaps it was wrong, I maybe should have brought up, that the letter that they've already acknowledged that they're going to relieve it meant that I didn't have to address that here, that it would be the extra time, right?
Right, no, I think that was my understanding as well. It does cover it. The one question I wasn't sure about, admittedly, is the date that CDTFA sent it to OTA. The whole question of whether OTA could relieve interest during that period is, I don't think we have that ability, but I'm not going to say, it's not a ruling, it's just, I'm not sure if we do. I did understand that the interest relief was resolved by CDTFA's memorandum. I think it was a memorandum or letter that, yeah. All right. Did you have something further?
Oh, no further questions.
Okay. Do you have anything further? Okay. I think I've asked all my questions then. As we indicated, I will leave the record open for up to 15 days, solely for appellants to clarify whether they are arguing that they did file sales and use tax returns as individuals, such that it would shorten the statute of limitations on the 6829 NODs to 3 years pursuant to the McCoon memorandum opinion. Okay. Yes.
Will it just close automatically if we don't hear anything, or?
I will respond. I will respond affirmatively either way.
I trust you.
Thank you.
Okay. But yes, if for some reason, if for whatever reason we did not hear from Mr. Mickey, I would close the record at 15 days. It doesn't extend beyond that, but I trust that we will hear from Mr. Mickey. Okay. Then, as I indicated, the record will stay open for 15 days, and you know that once the record closes, then we, the panel, will issue a written opinion within 100 days of when the record closes. If for some reason we get new information from Mr. Mickey that requires a response from CDTFA, we'll address it at that time. I think I've then covered everything that we need to cover. Yes? Okay. So I will say thank you all very much for participating today, and we have concluded the hearing, and the record is now closed.
Thank you.
Thank you. The record for today's hearing is closed, except for being held open for the later submission. I just meant for the court reporter's purposes.